Aviv and to supply a significant part of the city's electricity needs.
Today, engineers and entrepreneurs are still trying to crack wave energy. Globally, only a few hundred kilowatts of wave energy are deployed, compared with gigawatts of offshore wind. But the field has come a long way in recent years, and with the right engineering solutions, this new power source could eventually become competitive with more mature renewables like solar and wind.
I would have a lot more confidence in the successful wave energy companies today as opposed to like 20 years ago. But in the next few years, or maybe the next couple of decades, it will be more likely to be used in remote locations like islands that are otherwise dependent on expensive diesel power, or out at sea on gas decommissioning rigs, or for powering underwater autonomous vehicles.
So definitely, wave energy can compete with other renewable energy sources, but I personally believe that this is not a competition. In order to have a 100% renewable energy friendly world, we need all renewable energy sources to work together.
Who are all these people from? Who are all these people from?
Shout at me. So can you please tell me? I'm not going to... please wait.
You know, I've covered a lot of companies. I've covered a lot of Machiavellian companies where, you know, people play rough. I don't think I've ever seen anything on the scale of Nissan.
He is making you, but you act from this side. I mean, it's corrupt. The system is...
One of the most dramatic elements was Ravinder Pasi's home being raided by court officials in Yokohama.
You scared my wife. You scared my children. I worked in Nissan for 16 years.
So Rav Pasi's journey into the darkest recesses of the Japanese corporate world started when he was the general counsel, the highest corporate lawyer position in the company.
In the past few minutes, Nissan has revealed that its chairman has been arrested after allegations of serious misconduct.
He was tasked with investigating Carlos Ghosn. And he was told, conduct an internal investigation and get to the heart of the matter. And then along the way, he started to notice serious conflicts of interest.
He is one of the few people who knows an extreme amount of detail regarding the alleged crimes by Carlos Ghosn, and he's now ready to tell his own story on the record about some of the events that happened.
My name is Ravinder Passy. I'm the former Global General Counsel of Nissan Motor Co. Limited. And you could say, yes, I had a front row seat in terms of what was going on.
When Carlos Ghosn saved Nissan years ago, he was depicted in Japanese comic books as this hero, and now maybe we'll see comic books where he's the villain.
In corporate Japan, Nissan was quite an unusual company. It was led for 2 decades by a non-Japanese executive.
Well, Carlos Ghosn was a hero in the Japanese business world. If you had a global business celebrity in Japan and worldwide, it was definitely Carlos Ghosn.
In a country with few foreigners at the top, he stood out. But over the years, he saved Nissan from bankruptcy, allied with Renault and Mitsubishi, and turned the alliance into one of the most competitive in the world.
Yet as the years went on, I think his ambitions changed a little bit. He started thinking about legacy plays, and one of them was to really tighten the alliance between Renault and Japan. And unbeknownst to him, there was a contingent of senior Nissan executives that were really felt threatened by that move. They really thought that they would lose complete control of the car company, and even in the government, there was probably a little bit of anxiety about a national champion in the auto industry falling under full-blown foreign control.
Carlos Ghosn was an auto industry leader, respected by many in Japan. Now he's in jail.
The arrest of Carlos Ghosn came completely out of the blue. This was in November of 2018. He was coming to Japan on Nissan's corporate jet for a regular executive meeting, and he was met on the tarmac by Japanese authorities who whisked him away to jail and charged him with financial misconduct crimes.
So what happened was that a power struggle ensued inside the company, and somewhere along the way, it was criminalized. By that I mean that there were allegations leveled at Carlos Ghosn about the way he reported his pay to Japanese authorities, the way he handled money inside the company, that in other contexts might have been a board action, might have been handled internally. A number of executives at Nissan decided to take this difference and take it over to the Tokyo prosecutor's office, and that unleashed a chain of events that would shake the entire auto industry.
So after Carlos Ghosn was arrested, Nissan launched an internal investigation into the events that led up to his arrest.
So Rav Passy was tasked with investigating Carlos Ghosn, and he was told, get to the heart of the matter, find out what Carlos Ghosn did wrong and bring it to our shareholders.
It's really complicated because you had various things coming out of the weeds. 2018, the investigation has started, and we become aware of matters in terms of conflicts, actions by certain individuals that cause some concern because things might not quite be what they seem.
So in our story, we really took a close look at Harinada and his role in Carlos Ghosn's downfall.
Harinada is one of the most fascinating figures inside Nissan. He's also a lawyer. He's originally Malaysian. Hello, Mr. Hadi. And he had a meteoric rise through the company and became very, very close to Carlos Ghosn and other top figures. He had a front row seat at all the major strategic deliberations at the company. And when he discovered that Carlos Ghosn, as his final legacy play, was going to tighten the relationship between Renault and Nissan, he made a decision to go against Carlos Ghosn. And he became one of the key figures that decided that Carlos Ghosn had to go.
Harinada was somebody who actually recruited me into the company, so I have a long-standing relationship with him, or did have a long-standing relationship with him. For many, many years, he was a mentor. I had doubts about the credibility of the process right at the start. Harry Nada had a plea deal with the Tokyo prosecutors. Now, that suggests he was intrinsically involved in some of the wrongdoing, or the allegations of wrongdoing, and it just didn't smell right, just doesn't sit right.
So there was a basic conflict of interest. In other words, Hari Nada had to deliver results to Japanese prosecutors to avoid his own criminal liability, and he's accusing and leading the investigation of Carlos Ghosn.
Some of the people who had been involved in the original alleged crimes were also looking into the affairs themselves. Ravinder Pasi began pointing out some of these conflict of interest issues. And the reason for that is essentially his concern was for the company. If the company's own investigation into itself was compromised, that could lead to a very weak position in various lawsuits that it was dealing with across the world.
I had discussions with Harry, discussions with the statutory auditors about these conflicts, discussions with HR about some of these conflicts, because at that point, we reported into him. You know, at the time, everything was quite, as you can imagine, it was, we've got to do this, we've got to do that, we've got to move fast. But when you step back and look at some of these things, you just think, my God, what was going on here? Because me, members of my team, were being placed in immediate danger. Your chairman's been arrested, a representative director's been arrested. They both happen to be foreigners. And then now what we need to do, we're being instructed to do, is certain compliance professionals need to go into properties in Brazil, for example, and retrieve evidence. They've got to do it very carefully, because if they don't do it carefully, they're going to get convicted of criminal activities. And likewise, when a team of lawyers were commissioned to go to Lebanon. I mean, one of my immediate concerns was, why are lawyers from Nissan being sent to go to Lebanon to retrieve evidence? These are just lawyers, they're corporate lawyers from Nissan. You had revelations that a number of executives had benefited from share appreciation rights when they shouldn't have. I mean, you know, substantive amounts of money being taken by these guys when they weren't entitled to take them. And you do think, yes, how is this going to look later on? It's going to look quite concerning. So that triggered, for me, the sort of assessment that, well, I'm going to have to do something, because up until this point, I haven't put down on paper these conflicts and these issues.
So Rav Pasi makes a fateful move. He writes this letter to the board listing every suspicion he has in great detail, backed up by evidence, backed up by memos, of why this internal investigation had serious problems. He sends the letter to the board, and it's crickets. He doesn't hear much of anything.
Nothing happened thereafter. Nothing at all. Just like it just gone into a black box.
And he began to suspect that there was a desire, even at the highest level within Nissan, to kind of sweep these conflicts of interest under the rug.
Unfortunately for me, I think, you know, again, with hindsight, people must have thought that this is the nail that's sticking out, and we can't have this. within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the Goan Executive Conduct Matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK. It eventually transpired that I'd be the VP of Projects and Transformation, managing a team of 3. So you can imagine what this feels like at this stage. Almost an arbitrary removal from Japan, where I've lived for 8 years, had 3 children there, my family has grown up, and we've been settled there, having a few months earlier been promoted to vice president at a global level, to being almost demoted.
So Posse was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation and Harinada.
What happened to Rav Posse can be seen as a series of corporate humiliations. I mean, first of all, his immediate responsibilities were taken away from him. Eventually, he lost, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. First time I noticed this was around mid-March, and I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well. And, given I'd seen the Nissan security department behave in a very, very egregious manner with others in terms of following and surveilling, I was very concerned as to what they were doing and who they were giving this information to. Because if they're giving this information to the authorities, you do think, why? What's going on here? I mean, this is just not normal behavior.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
Where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in now, we have to break this key.
So it's a pretty extreme way to treat someone who'd spent 16 years at the company.
These people have all come in. We don't really know who they are, apart from the fact that I've been shown a badge that says the Yokohama court. And they're here to recover a laptop and a mobile phone. It was even more weird because I'd highlighted to the directors that certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed, which, again, I just couldn't understand. What is the point of doing that? This isn't a car company. This is not the KGB.
think it's fair to say that Rob Posse didn't have full battlefield awareness of all the intrigue going on at Nissan. I mean, Hari Nada is interesting because he's both charismatic and charming, and one of the most brutal corporate infighters one could ever run across.
This is a confidential company email, right? You should not have this.
If he had fallen into line, he would probably still have his job at Nissan, be paid very well, and continued his work.
A career that he spent 16 years building at Nissan is irretrievably broken. It's been smashed to smithereens. He and his family paid a huge price, certainly. But in terms of being able to sleep at night, I think, he's come out ahead.
I highlighted issues to the highest levels of the company so that they could be dealt with appropriately by those in charge. There was no response to those, and there was retaliation against me. What's really profound, like absolutely profound, is that none of your colleagues, I mean people who you have known for years, forget it.
Yeah.
You're on your own.
Yeah.
And you got to be ready for that. You've got to be ready for that. If you take it on anyway.
This is the awful truth. There's always someone in the family that's pushing it.
This lady does not deserve to be taken advantage of, especially at your age with your own grandchild.
Yeah.
My grandma is having to sue them. I'm testifying against them. Nobody's talking. They're one floor below right now. I get afraid to go on the elevator. It's sad that it had to devolve to this.
It's like a soap opera.
It's a very sad thing.
It's a family feud.
A family feud.
Here's a family that, on paper, you would think has the wealth that so many people seek, yet at the end of the day, it seemed to sort of rip everybody apart. My name's Tom Schoenberg. I'm a senior reporter here at Bloomberg News, cover financial enforcement. I was approached by someone close to the Schottenstein family and asked whether or not I would be interested in writing about Beverly Schottenstein and this case that she had against JP Morgan. And it was immediately clear that there was a great story here to be told. So I started just, assembling all sorts of documents that the family made available to me. That included a diary that Beverly had begun writing when she started having suspicions about what was actually going on with her money. Beverly obtained her wealth from the Schottenstein kind of retail empire that has at times included Big Lots, Value City, American Eagle Outfitters, DSW Shoes. Beverly's husband died, and at which point they sold off their portion of the company, bringing them an enormous amount of wealth in around 1990. Estimates of her wealth were around $90 million. She, for many years, had that pool of money being managed by outside advisors. Her grandsons in the late 2000s had both graduated and were becoming financial advisors. She gave them a little bit to work with, and over time, her grandson, Evan, became the trustee of her entire estate. Managing sort of family money is not a conflict. In fact, some ways in wealth management, it's kind of how you get your start. It's kind of the seed that you need to sort of get going in the business. But Beverly started having suspicions that something was wrong probably in around 2016.
Well, there were suspicious things, but taken separately without everyone talking about their own experiences, it was hard to really put it together.
She had written a check to her caretaker, Dawn, that bounced. So she went down to her local Chase branch to sort of find out what was going on. She wasn't getting paper statements in the mail, so she asked them to print out a number of her statements having to do with her checking account and her credit card account.
So we went to the bank and asked for the statements. And she got a whole year and going through all of them, page by page by page.
And it was there she saw all sorts of charges that she said she didn't authorize or didn't know about.
I was becoming very, very suspicious. I was starting to look in the money part, and that's what bothered me more when I saw that money was going. And I was not a big spender.
Around the same time, Dawn, she starts noticing Beverly's son, who lived in the condominium below her, came up with Evan with a shredder and started grabbing papers in her office area, including some with JP Morgan letterhead, and just started sitting at the kitchen table, just shredding documents over and over.
Yeah, they came in one morning.
They used to do it in the back.
Through the back door, and they brought the shredder inside. And then they went in the drawers in the office and took out all the papers, and they started doing it. I was very suspicious because I know you don't go around and destroying papers.
Beverly said that they had done this many times before.
That's when she said to me, Dawn, I'm going to write my feelings in this black book.
Diary.
And it's a diary, and she started writing. Each day she would write a little at a time.
Around the holidays of 2018, a package had arrived, a FedEx package, and in it were materials about a venture capital fund based out of the Cayman Islands. Dawn and some other family members take a look at this, and they see that Beverly is signed up for this fund to the tune of $5 million over the course of several years.
And that was really the beginning of it. That was sort of the tip of the iceberg when it became obvious that something was going on, that my grandmother really wasn't aware of this fund.
Beverly started to panic. She got really upset and called, JP Morgan's headquarters in New York and asked for Jamie Dimon. She said she was told someone would call her back, but she says that never happened. She wrote a letter to Evan and Avi, and in there she laid out a number of things that were concerning her: unauthorized trading, the checking account. She had about $1 million worth of jewelry in a safe deposit box, and that her son Bobby had the key to that box, and that jewelry had gone missing. All this was kind of packaged in this, 5-page handwritten amendment to a will and trust.
There's such an evolving narrative about why the jewelry was taken. The only truth we really know is that the jewelry is gone. But why it happened, there have been a lot of different stories.
You just don't take your mother's wonderful things and hand it out.
and they emailed that note to JP Morgan to seize all activity on her account.
And it ended up setting off a firestorm after that. As soon as they got this email that there was a cease and desist and that she wanted to send her money and change brokerage firms, they were actually vacationing one floor below downstairs. They're there right now.
The next day, Beverly's in her place. The granddaughter's still in her place visiting. Dawn is there, and up comes Bobby kind of barging through the door. And he's screaming about what was sent to the JP Morgan. They're now investigating them. And he's furious, takes his mother and sort of puts her into a chair, gets pen and paper, and she says physically forced her to write a retraction letter.
They were pushing me around.
It was a scary time. I was really afraid too.
I had to take her to the doctor, and she did an x-ray because she was in so much pain.
The locks had to be changed. The phone number had to be changed. I really thought we were going to have to hire guards to be outside just for protection.
Oh, it was terrible.
Horrible scene.
Beverly brought her case before the Financial Industry Regulatory Authorities, usually known as FINRA. It took several months of hearings. She sees all sorts of transactions that's going on, hundreds of them that she claims that she never knew about, never authorized, but yet were logged in JP Morgan's files as having been direct requests from her. That included the sale of a large amount of Apple stock worth several $1 million, as well as all her stock in Big Lots. You know, over the course of their time with JP Morgan, Evan and Avi were making all sorts of trading on her account that was generating millions of dollars in commissions for themselves and the bank, yet she was not sort of getting any of the type of gains that you would expect sort of an $80 million account in a bullish market to be able to get. They issued a ruling entirely in her favor, finding that her grandsons, as well as JP Morgan, they were liable for violating their fiduciary duty, misrepresenting themselves, and they also found that the bank and her grandson, Evan, were liable for elder abuse. Evan and Avi, they were fired from JP Morgan. They issued an award of about $19 million. I reached out for comment, and JP Morgan emphasized that Evan and Avi were no longer with the firm and that their actions do not represent the sort of values of the bank. I reached out to Evan and Avi, heard back from their lawyer saying that, you know, they disagree with the law and the facts that FINRA kind of used to decide the case against them and are seeing if they can have it withdrawn. Her son, Bobby, wrote her a letter, said his sons weren't criminals, and he also admits to taking her jewelry. And he says he needed it to pay off some bad business debts he had.
They never once came up to say, I'm sorry.
If there had been an apology and some acceptance, and asking for forgiveness from my grandmother, I don't think we'd be in the position that we are now.
Since the piece came out, we've received dozens of messages from people, many of whom are telling their own sort of personal tales of, kind of financial advisors gone bad, or family members who got control of an estate and abused, those within. Seems that it's really resonated with a lot of people. I keep, hearing a lot of feedback about Beverly and how, a lot of people feel she did the right thing.
You're never too old to stand up for yourself and try to right an injustice. She was adamant that she wanted to stand up for herself, but at the end of the day, they did wrong.
It's a painful life lesson. Beverly taught them that you don't mess with grandma.
April 20th, oil markets did something they never had before, and they crashed, went into negative territory, and closed the day at minus $40. Meanwhile, in a place called Thaden Boyce in Essex, a group of 9 traders, led by a guy called Cuddles, made $660 million over the course of a couple of hours.
The price of oil has collapsed to a record low.
We've never really seen anything like it. WTI this morning down more than 35%.
People maybe wouldn't have been so surprised if the oil price had fallen to zero, but the oil price went to minus 38. It went far lower than anyone had expected. And so lots of people in the market were saying, well, hang on, something else is going on here.
A couple of months later, I started to get wind through a kind of network of sources that a tiny firm in the outskirts of London had made a huge amount of money that day and potentially had some part to play in what happened.
The information we got was that 9 traders at Vega Capital London had made in the region of $660 million in one day. As a group, I think they made as much money in one day as Apple makes from its international sales in one day. I mean, it's an insane sum of money.
Did they pull off a fantastic trade? Did they predict the way the market was moving and get it absolutely right? Or was there something else going on, and had they actually done something that breached market rules in a bid to sort of push the market? And that investigation is ongoing. So Paul Commins is a trader who cut his teeth in the pits in the 80s and 90s. When everyone had a nickname, his was Cuddles. If you can imagine, that was a very sort of cutthroat type of world where people are doing, you know, hundreds of thousands and millions of dollar trades by shouting at each other, giving hand signals, and then sort of scrawling on scraps of paper.
The culture of the trading pits in London was very influenced by the working class guys who became traders there. They weren't like the city bankers that had gone before them. They weren't usually Oxford or Cambridge. You know, they didn't wear Savile Row suits. They were ordinary working guys who happened to have a talent for trading. And a lot of them came from Essex.
I think it was 400 traders in the pits, and Cuddles in his, you know, oil and gas pit was described to us as amongst the top 3. In amongst that, was very successful and made, you know, very large amounts of money as a young man. But, you know, inevitably, mechanization and the arrival of electronic markets was the kind of death knell for the pits. And in 2005, the IPE closed down.
And when the pits shut down, a lot of the traders who worked there lost their jobs or quit or went to work for financial institutions. But Paul Commins decided to start his own trading collective out in Essex.
Some of them are ex-pit guys, cut from the same cloth as him. Lots of them are actually sort of in their 20s, and they're his, you know, drinking buddy's son, or they're his own kids' friends from football. You know, they're young lads, hungry and ambitious, and he brings them into the fold. And fairly shortly, he's got, you know, maybe a dozen or so traders that they're independent, let's be clear, but they're all part of this collective.
Yeah, I'll let Liam deal with Essex.
I am from Essex, so I feel like I'm free to, you know, to get into this.
Sweet, as they say.
If you were to ask someone in Britain how they would imagine a kind of Essex person, they would see someone who's maybe slightly flamboyant, with a sort of Cockney accent, a sort of Guy Ritchie-style accent. You know, not afraid to splash the cash, but it's probably pretty bright and has done well for themselves.
Don't even make sense, does it?
But, you know, these guys, they drove around very nice Rolls Royces and Bentleys. They went to places like Marbella on holiday.
Thaden Boyce is a very wealthy place. You have to have considerable income to be able to afford to live in that village. It's a really nice place to live, and it's 20 minutes tube ride away from the city.
Earlier in the summer, we have this lead, which is that there's this tiny firm called Vega Capital London, and they were the biggest winners from the biggest oil crash in history. You know, anyone that covers markets is going to be surprised about that. You know, you're thinking your BPs of the world or your Glencores, but it's this tiny firm.
And one of the big challenges that we had was actually finding out who worked with Vega Capital. It wasn't immediately obvious, and at first we had absolutely no idea. If you go to the Vega Capital website, it says it's under construction. If you do basic online searching, it's very difficult to find anyone who's publicly connected to the company.
So inevitably, we're incredibly curious at this point. Like, who the hell are these people?
The more reporting we did, the more it became clear that this group were connected socially as well as professionally. They went to weddings together, they played golf together, they would go on holiday together. We found out that a number of them were members of the West Ham Supporters Club in London. A few of them started companies together, so you could see all the connections between them and start to see a distinct group emerging.
And it really just was this kind of shock that, you know, this wasn't just like a hedge fund or a firm you'd never heard of. This was actually a group of buddies who all had the same experience on this day and had all made a huge amount of money. So if you're an oil trader, there's a number of different ways you can trade, and probably the most popular is WTI Futures Contracts.
And it's basically a contract that says, I'm going to buy 1,000 barrels of oil from you at this point in the future, or I'm going to sell 1,000 barrels of oil to you at this point in the future.
It's actually just a financial contract to gamble on to predict whether oil is going to go up or down.
On the 20th of April in Essex, there have been signals for a while that this was going to be an exceptional day in oil markets. And we know that some of them arose early and started their trading in the early hours of the morning while it was still dark outside.
Essentially what they were doing is buying contracts that gave them an obligation to buy oil at whatever the price ended up at 2:30 p.m. So they're basically placing a bet that oil was going to fall throughout the day.
But they're simultaneously selling lots of oil as well. And whether they make a profit and how much profit they make is the difference between what they buy the oil for and what they sell the oil for. Now, of course, we now know throughout April 20th, the price dropped and dropped.
So this is going very well for them. You know, they are committed to selling oil at these prices, and the prices are continuing to fall, which means they're going to be able to offset it and buy oil at cheaper at the end of the day. Now, once it gets to kind of 1:30, 2 p.m., that's when things start to get really interesting. Suddenly there's a kind of influx of buyers and sellers, you know, as desperation increases in the market and trading volumes go up. Now at 2:08 p.m. exactly, something bizarre and unprecedented happened, which is that oil passes into negative territory.
And it fell to a record level of minus $38.
We've never seen anything like it, period, in terms of the contraction of the global economy.
That huge gulf between what they were buying the oil for and what they were selling it for enabled them to make more money than they ever thought possible.
So their profit was the difference between minus 37 and all of these positive numbers on every contract they sold.
The price of crude briefly hit minus $37 a barrel. For one group of traders operating from a small office, it was a very, very profitable day.
It's important to remember this had never happened before in the history of oil trading. No one could have predicted it.
I can't think of another example of where you enter a trade and you get paid on both sides. You get paid both to sell and to buy. It's unthinkable.
One thing we know about the Cuddles Trading Arcade is that they were very comfortable taking large risks. And, you have to be clear, this was a large risk.
Yeah, we spoke to oil traders, both people that know these guys and people that don't, and they all say that this is, incredibly risky.
And that's actually what stops a lot of oil traders doing trading like this. They simply aren't willing to stomach the risk. But Cuddles and his friends were.
So when the kind of final calculations came down, the group of the 9 most profitable traders made $660 million or thereabouts between them. I mean, if you can imagine, I think 3 or 4 of them made in excess of 100 million each.
One of the astonishing things about this trade is that 2 of the individuals who made more than $100 million in a single day were in their 20s. One of them was 22 years old. Only a few years earlier, he'd been posting on his social media about doing teenage stuff with his mates in town and going to see girls and rap music. And here he is a few years later making $100 million in a single day's trading. When me and Liam discovered that, we couldn't believe it. We couldn't believe what we were seeing. Oil trading is a zero-sum game. Anytime you're making money as an oil trader, someone else is losing it.
Amongst the biggest losers were the investors in this Chinese fund, Crude Oil Treasure Fund. There were thousands of them, and they lost everything.
Lots of people had put their savings into oil funds. They lost money that day. Big banks and brokers who sort of stand in the middle of trading parties, they lost money that day.
And another interesting thing is that oil-producing countries like Kuwait or Canada, they sell oil as an average of the WTI closing price over the preceding month. So the fact that one of those numbers in that average was minus 37 meant, if you can imagine, countries like Saudi Arabia and Kuwait potentially lost a couple of dollars on every single barrel of oil they sold that month.
Vega Capital's traders made such an extraordinary sum of money that it was inevitable there would be some scrutiny of what they did. But it wasn't just the sums of money they made. In the vital half an hour before the settlement price was set, they were by far the biggest sellers of oil futures in the market, which is an incredible thing to think about when you consider that the other participants in that oil market are going to be the world's biggest banks, oil majors, BP and Shell, and here you have a group of 9 guys in Essex who are having this significant influence over a global market for oil.
I mean, I think you have to assume that if these guys had made $7 million or $10 million, they probably would be celebrating in Essex right now. But the fact that they made closer to $700 million has meant that they are facing understandable scrutiny.
We wrote individually to all the Vega traders who did exceptionally well that day, and we got a letter in response from a law firm representing the group. The law firm was at pains to point out, number one, that they haven't been accused of any wrongdoing, that they all traded independently and separately, and they'd basically all made up their own minds that this was what was going to happen in oil markets based on publicly available knowledge, and decided to execute this trade.
What I love about these stories is there's a real variance of opinion, and some people will look at what happened and think that must be dodgy. They all traded at the end of the day. They all made a huge amount of money while all these people lost. That's shocking. But lots of people say these guys are at acute disadvantage. They're in a market that's inhabited by, huge technology-driven funds and firms and oil giants that have got all the advantages in the world, and when you get a bunch of Essex geezers who essentially beat the market and find a way to make a huge amount of money, they should get a pat on the back, really, because that's the dream. Since this happened, a lot of the guys have stopped trading the monthly settlements that they'd done so well at in the past. Several of them have set up new companies. They've essentially gone very quiet. Any kind of social media presence they had is kind of closed down. By all accounts, they're, waiting this out.
It's certainly too early to try and predict how the regulatory investigations are going to pan out. We just don't know. There's a number of potential outcomes for these guys. Potential punishments if there are any findings of manipulation against Vega or anyone affiliated with it might be you could be fined, you could be banned from trading, and in the most extreme cases there have even been criminal prosecutions in the past of people who have been found to have been manipulating the settlement and misconduct related to trade at settlement. There are other outcomes too. One obvious one is going to be that they're able to walk away from this life-changing trade with all the money that they made and celebrated as heroes in the trading community. That they'll go down as legends.
It's very important, given the nature of the climate crisis right now, for the general public to have an understanding of what progress is or is not actually happening. And I think many readers right now, they'll see these hundreds and hundreds of companies making these big, bold climate claims. And they would be forgiven to think that, you know, we're well on our way to meeting the emission reduction trajectory we need to be on. And the reality of the matter is we're just not on that trajectory. And a key reason for this sort of disconnect is the use of offsets that aren't doing what they claim to be doing.
We have a massive potential for sort of willful blindness. We can convince ourselves of things regardless of what the facts are. And so that's what tends to happen in these cases. It's not that anybody is setting out to commit climate fraud. They sort of walk themselves into a situation and they convince themselves of one thing, and that allows them to convince themselves of another thing. But at the end of the day, they're doing something that makes no sense at all.
My name is Ben Elgin. I wrote the story about how the billion-dollar market for carbon offsets is setting back the fight against climate change. So one of the challenges in reporting on carbon offsets and trying to figure out what's going on is really finding good experts who have been steeped in this marketplace and are willing to candidly talk about it. One of the best people for this is a fellow named Mark Trexler, and I've been talking to him for more than a decade.
My name is Mark Trexler. I've worked in climate change for the last 30 years. I was actually hired by the World Resources Institute in Washington to work on the first carbon offset project in 1988. In terms of defining a carbon offset, one of the beauties, so to speak, of greenhouse gases, sort of the silver lining of greenhouse gases, when you put up a molecule of CO2 into the atmosphere, it can be anywhere in the planet in 7 days. And therefore, if there's an option to reduce emissions on the other side of the planet, and you can do that very cheaply as compared to doing it in your factory, for example, then why not pay that person, that factory on the other side of the planet to reduce their emissions? Then you are, in a sense, offsetting your emissions, and the atmosphere doesn't really see your emissions anymore.
So carbon offsets have been around for quite some time, and they were actually key with these international climate agreements, such as the Kyoto Protocol, which mandated the wealthiest countries reduce their greenhouse gas emissions.
The treaty was signed on the 11th of December, 1997.
Decided. The business community in general saw carbon offsets as a huge opportunity to comply with whatever policies and measures might be coming down the pike on climate change much more cost effectively.
We've seen a huge surge in companies making big proclamations about how they're going carbon neutral or zeroing out all of their carbon emissions.
We're going to reduce our carbon footprint to net zero.
Unilever is committing to net zero emissions.
We can achieve a net zero emissions world.
We began looking at these corporate claims of dramatically reduced emissions, and we noticed so many of these companies were using carbon offsets to achieve these aims. And as we began to look at the carbon offset projects themselves, what we found is that the environmental benefits claimed by these companies are not actually what they seem to be. And as we sort of saw and spotted a number of these very aggressive carbon offset projects, which appeared to be generating inflated credits or bogus credits, we saw a number of them were associated with the Nature Conservancy. This surprised us. The Nature Conservancy is the world's biggest environmental group. They have about $1 billion a year in revenues, and they've been around for 7 decades. They've preserved about 125 million acres of land, and they've done so many good works over the years, and they've been very strong in terms of working with corporate partners. The Nature Conservancy has taken a different approach, a very pragmatic and pro-business approach. They will not go out and criticize a big polluter, but they're very happy to work with them. Some might say that, well, that's selling out, but others would say, and those at the Nature Conservancy would say, these companies have deep pockets. They can help fund important preservation work, And we have absolutely no problem working with them on this stuff. So companies are very warm, and they've partnered with the Nature Conservancy for many years. And yeah, it definitely lends a sheen of credibility to these projects.
Here's 20 new reasons to visit Disney World this year. 1, 2, 3.
If you look at, for instance, Disney, that's a sprawling company with theme parks and cruise lines that burn up diesel fuel. They have office buildings and television studios that consume electricity. So these companies are trying to make major reductions in their carbon footprints, but it's very difficult to change these fundamental ways their businesses operate. So Disney has been a big buyer of carbon offsets that are orchestrated by the Nature Conservancy. One of the projects that they buy from is called Pennsylvania Ridges. And that's a plot of land. Most of the land is actually about a 3-hour drive outside of Philadelphia. Interestingly, this land, 3,000 of these acres, was actually acquired by the Nature Conservancy in the late 1990s. This land was imminently threatened. There was a pending logging contract on this land. So they do what they've done so well for all of these years, which is they go out, they raise money from local philanthropists, and they go buy this land to protect it from developers and loggers. And at the time, according to an archived version of the Nature Conservancy's website, when they were proudly announcing this deal, they said, these threats have been abated because of this acquisition by the Nature Conservancy. So it's really interesting now, fast forward 2 decades to earlier this year when they put forward this carbon project. And if you look through it, this land is a key part of that carbon project. And what they're now saying is this land is now, once again, imminently threatened. 72% of the trees are going to be cut within 5 years. Now, this is just astounding because this land is owned by the Nature Conservancy. They do not clear-cut land that they've bought through philanthropic donations. So this scenario that they've put forward to get carbon revenues is not really plausible. And what that means is when you have Disney coming in and buying these credits, when it eventually lowers its carbon footprint because of these credits, well, that won't be a credible or truthful claim by Disney. So this is an organization that truly understands the threat of the issue of climate change and is wanting to do its part to address this. However, in this situation, it just appears their drive, which they've had for decades, to increase the amount of revenues that it can use for land preservation work. Nature Conservancy and many others see that the carbon credits as a pot of money that they can tap into to further their own benevolent aims. But unfortunately, what this has resulted in is claims of climate progress that just aren't really happening. So the Nature Conservancy defends vigorously these deals, and they and others will say, look, our projects are just following the rules that these registries set up. So some would also put some of the blame on the registries themselves because they're setting up the rules which allow these vapid projects to get up and sold. So we've reached out to all of the companies we mentioned in this story, including Disney. They didn't want to be interviewed for this story, but they all told us that, look, we have to rely on the experts out there, and those experts, they say, are these carbon registries that have been set up. Most of these Nature Conservancy deals are set up and sold on this exchange. It's called the American Carbon Registry. Now, it's the oldest of these registries that allow voluntary carbon credits to be sold. They've been around since 1996. What these offset registries do is they set up rules, and any carbon offset project has to follow those rules. But there's this tension that's always there. If the rules are too strict, then it's going to be very hard for carbon offset projects to get up and running. So there's this balance going on where the registries want rules that attract projects, but they don't want it to be so strict where it will disincentivize projects from getting listed.
One of the challenges with designing carbon offset systems is that there are normally two people at the table. You have buyers and you have sellers. And to some extent, you have policymakers, but the buyers and the sellers are really the ones with the expertise, with the incentive to really participate hard, make a lot of things happen. And the challenge there is that both of them sort of want the same thing, or they're both happy with the same thing. They're happy with low-cost offsets and a lot of them, because that works for their business model. You end up, though, with nobody really representing the atmosphere, so to speak. Nobody's really representing the climate in those discussions. And so the policies end up biasing the whole system, and you end up in sort of a race to the bottom, and that's what we've seen happen. When it comes specifically to the topic of carbon offsets, I am a fan of carbon offsets in the sense that they can help mitigate climate change. They absolutely can. But if we're not going to do it correctly in a way that actually does help mitigate climate change, then it's nothing but a distraction. And after 30 years, you have to start wondering, is it really just a distraction? And that's really unfortunate, but that's where we are. Ultimately, what needs to happen is systemic change. We're sort of nibbling around the edges with some of these different things. We need to change how we produce energy. We need to change how we transport ourselves. We need to change what and how we eat. We need systemic change associated with transitioning to a low carbon economy. A lot of what we're doing today is not promoting systemic change. It's sort of trying to stick your thumb in the dike to preserve the current system. And at the end of the day, that can't really work.
The Hyperloop. There's a good chance you've heard the name by now.
This is the Hyperloop system. It can take people hundreds of miles in minutes.
The Hyperloop, a series of tubes that would transport people in pods at ultra-high speeds over long distances.
It's a remarkable new form of transportation that can whisk people from city to city in a flash.
29 minutes from New York to D.C., 30 minutes from L.A. to San Francisco.
For years, we've been seeing these futuristic, utopian renderings of some cross between a spaceship and a monorail. But lately, the Hyperloop is becoming much more real.
Yes! It was surreal to be even sitting inside a Hyperloop, and just even more incredible to actually be like riding down a track in something that was nothing more than a crazy idea 6 years before.
Companies all around the world have been developing and testing the technology needed to propel passengers at speeds of over 1,000 kilometers per hour. But for many, speed is only the first step to unlocking the full transformational effects of a new mode of transportation.
Fast is what we just sort of take for granted in the Hyperloop world. It's the network effects that really deliver the benefit. And that opens up a completely different scale of economic opportunity.
planes, trains, automobiles, and boats for getting around Earth. But what if there was a fifth mode? And I have a name for it, which is called the Hyperloop.
The Hyperloop?
Hyperloop, yeah.
In 2013, while riding high on the growing success of Tesla and SpaceX, entrepreneur Elon Musk released a white paper outlining the basic framework of the technology he called Hyperloop.
The basic idea goes a little something like this.
A tube reduces the air pressure to a near vacuum-like environment. A Hyperloop pod is then suspended in the tube, usually by magnetic levitation. The whole pod can then be propelled forward. Because there's no traditional friction sources like air resistance or rolling friction that would push back against the pod, the Hyperloop is able to move at incredibly high speeds and do so fairly efficiently. Despite its futuristic name, however, the general concept behind Hyperloop is actually pretty old. In fact, New York City's first attempt at an underground public transit system in the 1870s was based on a similar principle. The pneumatic transit system was short-lived, however, only stretching one block and topping out at a rather leisurely 10 miles per hour. While Elon would make some 21st century improvements to this concept and bestow a very 21st century name, he wouldn't end up pursuing the technology itself, instead electing to focus his efforts on something a little bit deeper, literally digging the requisite tunnels via his boring company. It would take another billionaire industrialist who dabbles in spaceflight. No, wait, not that one. Yeah, that's the one. After Richard Branson would make a large investment in the company Hyperloop One, it would be renamed to Virgin Hyperloop.
What we've always been trying to do as a company is show that this technology could work, that it could be made safe, and that ultimately it's something that's happening in the next couple of years, not the next 20 years.
Josh Geigel is the co-founder and CEO of Virgin Hyperloop. In a familiar tech startup story, he's seen the project go from a garage to a large-scale testing facility outside of Las Vegas.
So we started building the first kind of Hyperloop system in 2016. We've done a lot of work, about 500 tests that we've done on that over the last 5 years. And what we realized that we need to do is take that technology, show that it can be commercial, so drive the cost down, improve the efficiency, improve the performance. But the key thing is actually making it approachable and safe for individuals.
In order to do that, Josh, along with Virgin's head of passenger experience, Sarah Lucian, bravely volunteered to take the inaugural ride.
What her and I were realizing is we're the first two people sitting in a Hyperloop. The only type of people that have gone through this environment are in spacesuits, and there we are in just normal clothes because of the system, the safety of what we've designed.
3, 2, 1, launch.
And then once we started going, you felt a bit of acceleration. We accelerated a little bit harder than we would in commercial. It'd be like a sports car. Yes. We got to about 108 miles an hour on that test. And it's a short run. It's about 500 yards or so, and came to a stop.
The test, lasting only about 20 seconds and covering only a quarter of a mile at just over 100 miles per hour, is a long way away from a true functioning Hyperloop. But as for optics, it's a crucial step for the future of funding.
The number one question we got from investors or from project proponents or just people in general was is a Hyperloop safe? And what better way to show something is safe than by actually getting people on it?
But convincing investors and governments that would likely be fronting some of the construction costs for an unproven technology is no easy task. First and foremost is the question of safety.
Most people don't know how an airplane works, but yet they get on an airplane. They get on an airplane because, it's faster than driving. And most importantly, they've probably gotten off of one before. They've seen someone get off of one before. And so what we set out to do was actually show that Hyperloop could be safe with two normal people, not astronauts, not adrenaline junkies or test pilots or anything like that. Two normal people getting on a Hyperloop, and then most importantly, those two people getting off.
But beyond safety concerns, constructing Hyperloops will undoubtedly require a significant capital investment to the estimated tune of around $60 million per kilometer of track. So a track from San Francisco to Los Angeles, for example, is likely to come with a price tag over $10 billion. And before large governments are willing to come in and front those costs, investors who are funding Hyperloop development must accept it as a long-term mixture of technology and infrastructure investing.
Investors that are used to short returns because you're developing apps or something to that effect, those aren't the investors that really get excited about Hyperloop. What you start to see is the people that are looking at platform technologies, right? So this idea that because the smartphone existed, Uber could exist, right? So who are like the Vanderbilts of this century? And that's the part where you're going to get a lot more no's than yeses. But those people that have the ability, the fortitude to stick it out, to see the game-changing platform here, those are the people that we're looking for. And since we've done that passenger test, there has been a lot of interest that's really, oh, this is a lot sooner than I thought.
Envisioning the ripple effects of what Hyperloop could achieve, though, is fairly challenging at this stage of development. It's fast, yes, but for point-to-point travel, traditional maglev trains can move pretty fast as well. And outside of China, South Korea, and Japan, even those haven't seen much adoption elsewhere due to the high costs and questionable profitability. The Shanghai line in China, for example, loses around $100 million every year. Hyperloop companies, however, believe they can offer something different than traditional railway lines.
My name's Alan James, and as far as I know, I'm the only guy on the planet who's written a government-level business case for 300 kmh conventional high-speed rail, 500 kmh maglev, and 1,000 kmh Hyperloop. It's fundamentally about moving people from where they are to where they want to go, when they want to make those journeys, and doing it in much smaller numbers. So pod designs for Hyperloop range from 12 to 28 seats, typically. Why are they small? It's because small enables the network to operate flexibly. And a great example of that is the east-west strategic route across the north of England, from Liverpool to Manchester to Leeds. So to get from Liverpool via Manchester to Leeds by train is just short of 2 hours today. It'll probably take you 2 hours driving as well in average traffic conditions. Net result is those three city regions remain three separate entities: Liverpool, Manchester, Leeds. There's very little commuting traffic between those urban areas. Hyperloop absolutely changes that from the ground up. Liverpool to Manchester is a 5 or 6 minute journey. Manchester to Leeds is also a 5 or 6 minute journey. What that effectively does is create a single supercity economy.
In this vision, the Hyperloop acts a little more like a highway, where pods have fixed destinations and don't need to stop along the way. Meaning you can travel on a Hyperloop network from, say, Liverpool to Leeds, while the pod behind you travels from Liverpool to Manchester. And if that metro Hyperloop network is connected to other networks from the same location, you could travel from Liverpool to Paris or Liverpool to Amsterdam, all without making a single stop.
For passengers, for business, for leisure, that is utterly transformational. For high-value freight and logistics, it's equally transformational. But critically, if you do a Hyperloop network at scale, you begin to deliver massively significant carbon savings too.
A multi-regional Hyperloop network could become a replacement for both short-haul passenger and cargo flights and traditional ground transportation, both of which are significant carbon producers.
One Hyperloop-connected distribution hub, perhaps at an airport that is predominantly used for international air freight, replacing maybe 10, 12, 15 distributed road hubs. It takes a lot of polluting and inefficient truck haulage off the roads. That itself means roads gain extra capacity.
Hyperloops will still need to use electricity to both move pods and maintain the near-vacuum environment in the tube. Proponents of the technology believe that this can be done by using renewable sources, including a combination of solar panels and battery technology that could be used along the Hyperloop itself. But even with all multipliers of time and carbon emission savings that a Hyperloop network may provide, the investment capital required to actually build such a network becomes even more economically and politically daunting.
Committing doesn't mean spending billions on day one. Committing means, how do we phase it?
One company in the Netherlands is working to develop that technology, and perhaps more importantly, the international coalition needed to make the Hyperloop network a reality.
So we are here in Europe's first full-scale Hyperloop test facility, where we can already prove every conceptual technology of the Hyperloop.
This is Tim Houter, a co-founder and CEO of Hart Hyperloop, headquartered in the city of Delft. And while this testing tube might not seem as large as others, inside is a key technology to create the on- and off-ramp type infrastructure of a Hyperloop network. That is, a lane switch.
And that's something we can already test here. You can actually see it here, that the track is diverging from one track into two. That makes it possible to eventually split up the Hyperloop track in two sections. And in that sense, you can create a complete Hyperloop network. That in the end will make it possible to travel, for example, over a whole continent. Take Europe, for example, with the same ease as you can now travel with a metro in a city.
The nice thing about this magnetic levitation system that we've developed is that there's absolutely zero moving components in the track. So for example, if you have to do a lane switch, all you do is that the tube basically splits up, and statically the tracks also split up. And whenever the vehicle enters a switch, it either pulls itself to the right with its magnets, or it pulls itself to the left with its magnets.
Lane switching on traditional rail requires the physical movement of the rail. Even modern magnetic levitation tracks use lane switching techniques in order to transfer trains from one track to another.
And this is a very crucial element, because this is the thing that limits the capacity and, in the end, the usefulness of the rail network. Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. But in a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have your vehicles moving and merging in and out of the network very much like a highway.
For now, though, Hart's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects, and the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
order to help build this coalition of private and public interest in Hyperloop development, HART in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure the different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. I think in that sense, the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and in commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think, is a redeeming aspect in the business. People really want to see something happen, so having multiple people move forward is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase, "We now have a new mode of transport." And although all of that technology had existed before those 2 human beings rode it, it was the moment at which those 2 human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright Brothers Airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is some brilliant engineers have spent real time grinding out the details. And I thoroughly expect the next 3 to 5 years to be decisive.
This week, how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element could be a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utilities firm Snam about his new book and how green hydrogen could be competitive within 5 years.
Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors.
From Bloomberg's global headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. It's a new year, so here at Bloomberg Green, we're highlighting new solutions in the fight against climate change. And one of those is as old as the universe itself, hydrogen. It's the simplest element around, but could well be a game changer when it comes to turning around our dependence on fossil fuels. Today, hydrogen is used in the chemicals industry to produce petroleum products. It's also starting to be used in steel production, an industry under a lot of pressure to decarbonize. But it has far more uses as well, from powering cars to heating our homes. And Bloomberg New Energy Finance sees a seismic shift in the sector in the next 10 years as green hydrogen squeezes out dirtier alternatives. So-called gray hydrogen dominates today. But as renewable electricity gets cheaper and more accessible, so will green hydrogen. In this week's edition of Bloomberg Green, we'll explore what this push into hydrogen means for tackling climate change. We'll hear from Australian billionaire Twiggy Forrest about his pivot from iron ore to hydrogen, and we'll also speak with the CEO of Italian utility company Snam about his book, The Hydrogen Revolution. But first, what are we using hydrogen for? And why does it actually matter? Christine Lee Edwards explains.
Hydrogen, the most plentiful element in the universe. On Earth, we find it mostly bonded to oxygen in the form of water, or in other gases known as hydrocarbons. Hydrogen gas, H2, burns hot and clean, making it an attractive tool in the race to net zero. But isolating hydrogen from other elements is no easy task. Today, the cheapest way to do this is via chemical processes that break up natural gas. This releases a lot of carbon dioxide. Another method is to use electricity to split water molecules in a process called electrolysis. Although there is no carbon byproduct, a lot of electricity is needed. And if this power comes from burning coal or gas, it negates the zero emissions goals of using hydrogen to begin with. Hydrogen produced in this way, powered by fossil fuels, is called gray hydrogen. If carbon capture and storage is used together with fossil fuels, then it becomes blue hydrogen. If nuclear power is used, it's called pink. And finally, green hydrogen is when it's produced via electrolysis and powered from renewable sources. This method is considered emissions-free. It's predicted that by the early 2030s, H2 made from renewables will be cheaper than that made from fossil fuels. But that hinges on the cost of electrolysis declining, which will be achieved through larger projects and an expansion of manufacturing. To be clear, vast amounts of H2 are already used today. Global production in 2018 totaled 117 million metric tons. This hydrogen is mostly used for its chemical properties, not as a source of energy, and very little of it is clean. Some sectors like steel could start using hydrogen for these chemical properties, replacing coal. Industries like cement and glass may also use hydrogen as a source of heat. Another advantage is its energy storage potential. It can be stored over long periods of time and used when more power needs to be added to the grid. It also could hold an advantage over batteries in heavy transport and shipping. The promise of hydrogen for energy has been around since at least 1874, when Jules Verne wrote about it in his book, The Mysterious Island. But the future of hydrogen will depend on policy. Countries with net zero targets, carbon pricing, and hydrogen strategies with investment mechanisms are likely to see the highest H2 demand.
That was Bloomberg's Christine Lee Edwards explaining what hydrogen means for the energy transition. But how are businesses approaching the sector? Well, one of Australia's richest men is making a big play into hydrogen. Andrew Forrest, better known as Twiggy, made his fortune from iron ore, being the chairman, former CEO, and major shareholder in Fortescue Metals, one of the world's biggest miners. But after having made over $10 billion in profit from the metal in the last fiscal year, Twiggy wants to transform Fortescue into a clean energy company. He's been scouring the planet in search of investment opportunities in hydrogen and renewables. The firm plans to allocate up to 10% of its annual profits for green energy investments and is exploring projects across the globe, from Indonesia to Argentina. Francine Lacqua caught up with Twiggy Forrest.
There's only one type of clean hydrogen, all the rest is dirty.
Yeah.
That is green. If you just say green hydrogen is clean, the rest is dirty, then you've actually nailed it. And, you know, anyone else who produces any other rubbish, any other argument, just look them in the eye and say, why is global warming accelerating if anything you're saying is true? And then you'll know, actually, it's greenwashing.
Yeah, but there's a lot of greenwashing because I keep on being told it's a transition. We can't just, make the transition at a click of a finger. So what are we doing wrong? What can we do better?
I don't remember the personal computer having to transition the typewriter. I really don't remember that. I don't remember the smartphone having to transition the pocket calculator and the old landline. You know, its transition line is complete rubbish. The lie got put to it 2 days ago when JCB, a really loved British company, every right for the country to be proud of JCB, and Fortescue, holding a bit of a similar reputation, fantastic track record, everyone's done super well from Fortescue, huge balance sheet, super strong. When those two companies got together and agreed a $7 to $9 billion US agreement per annum, right, then that's a real wake-up call to say, hang on, green hydrogen is obviously commercial now. You know, every other form of fossil fuel hydrogen, you know, it can compete with it on price, it can probably lose on price, but what we know, it is cooking the planet. And only green hydrogen, zero methane, zero carbon in the supply chain. Don't worry about the molecules in the supply chain.
But at the moment, we're not even phasing out coal, if you look at the G20 communique. So we have a long way to go to talk about only using green hydrogen.
Yeah, so look, I have a call, which I'd like to make now, that the world should not fund any more coal-fired power stations, coal mining projects, ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen, that actually this pollution-free all the way through the supply chain fuel was now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop using money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, we've kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial. It'll never be supplied in the quantities we need it. You know, blah, blah, blah. Now we know, let's take action. It's practical. It's implementable. Let's do it now.
okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn the gas. At least they're pumping up carbon and methane into the atmosphere, honestly. Well, not that honest because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know of which is declining in value.
You don't have enough of it, right, to power the world?
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down.
Yeah.
Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality, and he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the SNAM model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create the infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia is very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's world headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source. and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's world headquarters in New York, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From
Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all in the green on this Back to Work Monday. Here, the big story, though, the tech standout today. Let's begin with NASDAQ up 231 points right now, up 1.6%. The NASDAQ 100 index up 1.7%. Financial markets beginning the week with moves across assets as investors assess the latest central bank commentary and developments in Ukraine. Tech shares driving gains in stocks powered by Twitter. Right now, the social media company is surging by 29.4%. It is higher after Tesla CEO Elon Musk took a 9.2% stake in the company. 10-year yield right now, 2.39%. The 2-year yield, 2.43%. Spot gold up $3.85 the ounce to $19.29, up 0.2%. Crude, a big story today, surging 3%. West Texas Intermediate crude up 2.9%, 102.20 for a barrel of WTI. So again, NASDAQ up 228 points, up 1.6%. The S&P's up 26, up by 0.6. The Dow up 44, higher by 0.1%. Well, a big question for investors, the path of interest rate increases and the Federal Reserve. Laura Rame is Chief U.S. Economist at FS Investments.
When we look to the GDP accounting in the first quarter, the trade deficit continues to just gap at record levels. It's going to mean that getting a positive growth number for this quarter is really going to be a challenge. One quarter doesn't make a recession, but it sure is going to make growth feel very stagnant.
ExxonMobil has signaled its highest profit since 2008 as Russia's war in Ukraine upends global commodity markets. ExxonMobil down 0.6%. BP down less than 0.1%. Chevron down 0.2%. EOG unchanged on the day. Pioneer down by 0.5%. And that's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And we're definitely off and running. Good Monday afternoon, everyone. It is Monday, April 4th, 2022. We are live in our Bloomberg Interactive Broker Studio. We are also on YouTube. And tech definitely leading the equity markets higher again, helped out by Elon Musk's big buy-in into Twitter.
We're all in on that. We're going to be speaking to Kathy Wood of ARK Invest. She's going to be back with us. We got a long conversation with her planned for a little later, Carol.
Yeah, looking forward to it. She was tweeting over the weekend about the Fed. She also has some really big macro thoughts when it comes to the passive index trade and play. So we're going to get to that with her deep dive after the closing bell. We're also going to do a deep dive into Elon. And, you know, we know he likes to tweet on Twitter, but what's this massive buy-in?
Yeah, 9%. He now has more than Vanguard. He's got more than Kathy Wood,
passive,
even
though.
Jack Dorsey.
Does he do anything passively?
Doesn't tweet passively.
All right, we're going to get to that. Also, among our most read is the Wall Streeter that everybody listens to and who is calling for more sanctions on Russia. And he is also expressing a bit of pity for the Fed.
Can I just say who it is?
No.
Okay, I won't say it, but
Okay.
you know who it is.
Okay.
Back with us is Andy Kurtzig, founder and CEO of Just Answer, who's getting ready to head to his nearly 300 employees who are on the ground in Ukraine. Look forward to chatting with him again.
Yeah, me too. We're also going to check in with the Crutch Fitness CEO, and then we're going to talk about Major League Baseball opening day later this week.
Yeah, we're going to hear how baseball's owners are winning the game behind the game.
All right, let's get to it and the markets and the market drivers report. Let's set that business week agenda on another busy Monday, folks. Kriti Gupta, she's back. We missed her, markets correspondent at Bloomberg here in our Interactive Broker Studio. Also with us, great to have back as well, Vince Signorella, global macro strategist at Bloomberg News. He's on the phone in White Plains. We did miss you. Every week is Jack full of lots of stuff. We've got another busy Monday, but the tech trade back on, and that's given some support. Thank you, Elon Musk and Twitter, in a big way.
Yeah, the tech trade is back on. And what's interesting here is that it's not a broad-based rally, which I think is arguably the problem here, right? You want it to be a healthy rally. You want small caps to be in on the trade. You also want energy and industrials and economically sensitive companies, and none of that is happening. In fact, I think about a quarter of today's S&P 500 move is coming from just two companies, and it's Tesla and it's Twitter, naturally, after Elon Musk took
That's surprising because Twitter is a relatively small company, so it's just a huge outsized move.
Right, that tells you how powerful the move is. But remember, Tesla also came out and said, well, we're posting record first quarter delivery.
Yes.
So that's
310,000.
Don't right? And even with some of the problems that are out there,
Right.
Elon Musk and Tesla figuring out the supply chain and so much more.
Yeah, I mean, their Shanghai plant shut down. I mean, this is a huge deal, and I think that's why you're seeing, in addition to, I think, a little bit of a defensive trade, just given the ramifications of what you saw in Bucha over the weekend, very sad images coming out of Ukraine and what that might mean for sanctions and the effects. So you are seeing that defensive trade and that tech becomes your haven of sorts. But Twitter and Tesla is still very much part of that story.
Yeah, Elon Musk is the name of the day, right? Hey, Vince, come on in here and tell us what you're watching here, because as Kriti mentioned, there's a really interesting backdrop of, tech absolutely thriving today, and equity markets continue to move higher despite this backdrop of global unease.
Yeah, I actually looked at something this morning because I thought it was going to peter out, but unfortunately it hasn't. Auto prices for new autos and trucks have continued to reach record highs, and it matches the CPI. It either leads or just follows the consumer price index on a year-over-year basis, and it's telling because it's basically saying as we go into the second quarter, at least the second quarter, if not the rest of the year, auto prices are going to remain very pricey, and they are impacting CPI, and that is going to affect consumers. My concern is as we get into the second half, many are calling for slower growth, and if we don't see a reduction in inflation, I won't go as far as to say stagflation, but it's definitely a worry, and it'll definitely weigh on risk, especially the bond and equity markets.
Yeah, I do wonder, there's been so much too written about the inversion in the yield curve. John Author's actually writing some interesting stuff. I know also Joe Weisenthal about what it says about maybe growth down the road. And I do think it's not unconstructive, Kriti, to have a conversation that when you see that inversion, it's just telling us, reminding us that growth later on is not going to be so great, so much so that the Fed may have to cut rates, which you have to think about in terms of your long-term strategy here, perhaps.
Yeah, well, that's what the market is pricing in, right? That is not necessarily what economists are saying.
But we've had a bounce back, so is it just pricing in what's happening now, or what?
Well, I'm going to piggyback what Michael McKee said, I think, like 2 weeks ago when we were on Inversion Curve Watch. And he said that this is also just kind of a function of what's pricing in the markets, right? You're trying to price in a very aggressive Fed, and the Fed is even surprising the market, which is already more aggressive. So it's kind of this really vicious cycle that you're seeing. Also, keep in mind, when you look at the inversion of the curve, it's not just about hitting that negative territory and then bouncing back. It has to stay inverted for a while. And that's really where I think a lot of people are making the difference here. And they're also making the difference in that the Fed does not consider an inversion unless I think it's a 3-month versus the 10-year. Vince can correct me.
That's the one that Mike talks about a lot about.
And that's the one that the Fed says, okay, well, we're not concerned until we see that measure in. And it comes down to banks as well. Are banks concerned about this inversion? You saw in Jamie Dimon's shareholder letter, he says, well, this could actually kind of work out all right. The Fed could, if they are able to hike properly, this could actually lead to a stronger consumer story for years to come. So yes, even if it does invert, we still might have years before we see that recession actually hit.
Kathy Wood talking about the Fed. I'm looking forward to her conversation later on, and we'll ask her about that. Vince, John Author's pointing out the reason we get in the equity market is because that longer term, stocks do go up, up, up. Having said that, you've seen a lot of market cycles. What do you think we need to be thinking about right now?
Did you just call him old on radio?
No. He's seasoned like a fine bottle of wine.
I'm just going to piggyback on your inversion story. I did a story 3 years ago, and something caught my eye, which I thought was really interesting, is that everyone speaks about the curve inversion and the negative aspects of what inflation follows, recession follows, and it's usually around a 10 to 16-month lag. What also happens is that inversion doesn't last for a very long time. And it's an incredible opportunity to buy the spread and look for that to widen once again back into positive territory. And there have been huge opportunities both back in 2000 and in the financial crisis. And this could be another one we're seeing now. To me, if I were a trader still, and if I were an investor, I'd be looking to layer into buying that spread to widen way back into positive territory.
All right, we got to run. Guys, thanks so much. Vince Signorella, global macro strategist at Bloomberg News. Kriti's going to be back a little bit later on with her chart of the day.
Let's get to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden is among the world leaders condemning Russia for alleged actions in the Ukrainian village of Bucha. A number of people can be seen in videos dead in the street with their hands tied behind their backs. Ukraine's President Volodymyr Zelensky calls it genocide. President Biden says the U.S. will respond with more sanctions.
We have to gather the information. We have to continue to provide Ukraine with the weapons they need to continue the fight. And we have to gather all the detail so this can be have a war crime trial.
Biden did not confirm reports that his administration is transferring Soviet-era tanks from Eastern European allies to Ukrainian forces in the Donbass region. He pledged, however, the U.S. would continue to provide Ukraine with weapons they need to continue the fight. Well, more money for vaccines is back on the table as lawmakers resume their debate on COVID spending. Bloomberg's Amy Morris with details.
Senators are considering cutting as much as $5 billion from the global vaccination effort and are now closing in on a $10 billion deal to help provide access to COVID vaccines around the world. The House is set to vote later this week on COVID-related aid for restaurants and small businesses, $42 billion for the Restaurant Revitalization Fund, and $13 billion to establish a new program for small businesses that lost revenue during the pandemic. In Washington, I'm Amy Morris, Bloomberg Radio.
A key Senate committee is considering President Biden's nomination of federal judge Ketanji Brown Jackson to the U.S. Supreme Court. The Judiciary Committee will vote later today. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Carol Massar, Tim Stenovic, it is Monday, another busy Monday. We talked about the equity rally. Unfortunately, the news out of Ukraine is not as upbeat, certainly when we look at the trade. There is still the footage. I'm sure a lot of you have seen it either on social media or on a traditional broadcast. The European Union now saying that work is underway on additional sanctions to penalize Russia for what appears to be war crimes in Ukraine. Nancy certainly covering some of this as well, as it condemned the alleged atrocities committed against civilians.
In a statement on behalf of the 27-nation bloc, Josep Borrell, the EU's chief foreign envoy, blamed the occupying Russian forces for the images of dead civilians in the streets, saying that the EU will work on further sanctions, quote, as a matter of urgency, he said.
Yeah, and what's interesting in this story and the reporting, our incredible reporting that's been done by our Bloomberg TV says, by our Bloomberg, I should say broadcast, as well as Bloomberg Print, those folks who are on the ground. In one of the stories on the Bloomberg says it's unclear whether fresh revelations of these atrocities will prove to be a turning point in the international response to the near 6-week-old war. I think when it started, nobody thought it would go on for this long, and yet here we are 6 weeks in.
Yeah, in light of reports that Russian troops executed unarmed civilians, some governments argue that the measures, these sanctions that we've been talking about, Carol, for weeks, don't go far enough, and they want the bloc to discuss a new and stronger package of sanctions, including targeting Russia's energy sector as soon as possible.
Yeah, it sounds like a lot of them would focus on closing some of the loopholes that might be out there, strengthening existing actions such as export controls on more technology goods, and fully sanctioning banks already cut off from the SWIFT global payment system. And as you said, you know, just looking at some of the things that are out there, also expanding the list of sanctioned individuals with dozens more people. So, I mean, that's what we're looking at. It continues to be kind of an economic pushback, although we do know that there has been military support, not feet on the ground, but in terms of equipment for those in Ukraine.
I just want to draw our audience's attention to another story among the most read on the Bloomberg terminal about Russian ships switching flags at a record rate over sanctions scrutiny. Check this one out on the Bloomberg terminal.
Yeah, ships trying to conceal their ties to Moscow and avoid being caught up in those sanctions in particular. Check out, as Tim said, the stories on the Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Back to work Monday with the Dow, the S&P, NASDAQ all advancing. We have got investors debating the latest central bank commentary, listening closely for that commentary, along with developments in Ukraine. Right now, we've got the S&P up 24, higher by 0.5%. Ukraine peace talks set to resume as the European Union vows more sanctions. The Dow's up 55, up 0.2%. NASDAQ, though, the standout today, up 208 points right now, up by 1.5%. Tech shares are driving gains in stocks powered by Twitter. Social media companies surging after Tesla CEO Elon Musk took a 9.2% stake in the company. Twitter shares, they're now higher by 28.7%. 10-year yield, 2.40%. We've got the 2-year yield at 2.43%. Spot gold is up 0.3%, $19.31 the ounce, while West Texas Intermediate crude oil is up 3.5%, $102.70 for a barrel of WTI. Again, recapping, S&P up 25, up 0.6. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We mentioned some of the headlines that we're following, and certainly Nancy Lyons did as well when it comes to Russia and Ukraine. So let's get right to our guest. Lucky for us, he's back again.
Andy Kurtzig is founder and CEO of Just Answer. Just Answer, it's based in San Francisco. It helps connect people with experts for professional advice. Andy, it's good to chat with you again. We talked to you just a few weeks ago because you have such a large portion of your staff in Ukraine, 200 plus employees in Ukraine. I just want to start with how are they doing right now, and what are they doing?
Well, so they're all live and doing as well as they could possibly be doing in the situation that we're in. So all of our preparations have paid off. We've been hustling to keep them all safe, and so far it's working.
And you, in your notes, you said that 6 of them are currently fighting, and those who are fighting are still being paid a salary.
Yeah, so what we promised to them even before the war started, when we thought that this might happen, was we'd pay them 50% of their salary in addition to the salary they get for being in the military, and then we guarantee their jobs when they come back victorious.
Hey, Andy, if we can take a step back, and we are grateful that you've given us some time. What are you, I mean, it's hard for any of us, I think, in terms of some of the atrocities that we're seeing in some of the news coverage of what's going on in Ukraine right now. What are you hearing from your team members who are on the ground in Ukraine?
I'm hearing pretty much what you're seeing in the news, which is it's dreadful, it's terrible. I mean, the seeing the bodies and the torture and the reality now that they've taken back some of their territories near Kyiv is just awful. I mean, and they're horrified.
For those
like the rest of the world is.
For those that have stayed on the ground and decided not to leave Ukraine, why is that?
Well, so a few reasons. I mean, we have of the 258 now employees that we have in Ukraine, 39 of them we've been able to get them out.
Mm-hmm.
But the rest, either they can't get out because of they're men between 18 and 60. It's against the law for them to leave the country.
Okay.
And then we've got people that maybe their spouse or their family members are stuck there, and so they don't want to leave either. So some of the women are staying by the side of the men that are forced to stay in Ukraine.
Right.
And then we've even got the woman that leads our office in Ukraine. Her son just turned 18, so he can't leave, and so she's not leaving her son behind.
Wow.
What's the message that you want to send to other people in Silicon Valley, other Americans who are here in the United States, and really just watching this play out? I mean, I think a lot of people have this feeling that, well, okay, the government's doing what it can do. There's only so much I can do.
You know, first thing is that this affects all of us. This is not some small skirmish in Eastern Europe. This is about democracy and about freedom and East versus West. This is everything that we worried about during the Cold War. It's actually happening now. And, this affects all of us. And so we all need to do our part to help.
Andy, I do wonder too, and obviously you're doing everything and anything you can to help your team that are there in Ukraine. How do you, though, our audience, a business investing audience as well, obviously caring, though, about the humanitarian aspect. But when you look at the market over in Europe, will this ultimately lead to kind of a business rethink about exposure, whether it's in Ukraine, whether it's Russia? Like, what is it, the longer lasting strategy that stays with us because of this?
Yeah, so we've already seen lots of companies boycotting Russia, and hopefully more will continue to do that. And as this goes on, my hope is that companies will not just think about boycotting Russia, but also buying Ukrainian goods and services. I mean, this war is about Russia's aggression and bombs and tanks, but it's also about the economy and sanctions, and we can all do a part to help the Ukrainian side of this. And so that's what Just Answer's trying to do, and I hope many other companies will do it as well.
Andy, you and your family are actually planning to go to the border of Ukraine. This is a mission to deliver medical aid, body armor, laptops, and more. You're taking your kids. Why is this important to you?
Well, so when my family and I got together a few weeks ago and we're deciding what we wanted to do for spring break, normally we would go to Hawaii where my mom lives and we love. We just couldn't bear to go somewhere fun for spring break when our friends and colleagues and the people of Ukraine are suffering so much. And so we got together as a family and we decided that we wanted to go and help.
Is there a message in terms of the governments that are out there who have already imposed a lot of certainly economic and business sanctions, as you mentioned, a lot of companies pulling out? What more do you think should be done at this point?
Well, I mean, they should continue to escalate the sanctions. They should continue to send military equipment and humanitarian supplies as well. So there's a lot more to be done. I mean, they've got a lot of people in Ukraine that are ready and willing to fight, but they need the supplies in order to maintain this war and to beat back Russia and fight for democracy. They're fighting for our democracy just as much as their own.
Andy, last bit of time with you, just about 30 seconds left. What's your message to other CEOs who have employees in Ukraine right now or thinking about hiring in Ukraine? As we know, it's a huge tech hub.
Absolutely. I think they should go for it. I mean, we had some offers outstanding when the war started. We've honored those offers. We've actually hired a few more people since the war started. We're trying to support the economy as much as we can, and hiring people there is one of the best things we can do. Unfortunately, most of the Ukrainian economy is crippled right now, right? If you're a trucking business or a warehouse or, chocolate company, whatever it is, you're probably not operating. But IT can kind of operate, and so we're able to support that.
We have to run. We wish you well, safety on your journey and your family as well. Andy Kurtzik of Just Answer.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You are listening to Bloomberg Business Week on this Monday. A lot going on, including, yes.
Can I just say his name?
No.
Okay.
Anyway, it's among the most read on the Bloomberg terminal. It's about somebody when he speaks. Everybody on Wall Street and the financial community and kind of the world listen.
Yeah, there's a reason these are among the most read on the Bloomberg terminal.
We're
going to
stick around for
dive into it in just a few minutes. First, though, less than 90 minutes to go until the close of trading on this Monday afternoon. Let's get an update from Charlie Pellet.
Thank you very much. The Dow, the S&P, NASDAQ, all advancing right now. Modest moves across assets. Investors are assessing the latest central bank commentary and developments in Ukraine. Tech shares driving today's gains, powered by Twitter. Social media company now up by 29.5% after Tesla CEO Elon Musk took a 9.2% stake in the company. NASDAQ is rallying 228 points, up 1.6%. S&P 500 index up 28, up 0.6. The Dow up 80, higher now by 0.2%. 10 years down 4/30 seconds. 10-year yield 2.39%. Spot gold up 0.4, 19.33 the ounce. And West Texas Intermediate crude oil rallying 4%, 103.29 a barrel in West Texas Intermediate crude. The email marketing company MailChimp says its network was breached following a social engineering attack. Coal prices topped $100 a ton for the first time in 13 years as Russia's war in Ukraine upends international energy markets and an economic rebound from the pandemic drives up demand for fossil fuels. A lockdown of Shanghai intensified over the weekend amid a surge in new cases and reports of new substrains of the Omicron variant emerging. Shanghai is testing all of its 25 million residents in another effort to weed out infections. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health. And on Bloomberg Surveillance this morning, he talked about China's COVID strategy.
It's very, very hard to stay at zero COVID forever, and especially with these incredibly infectious variants. And that is what China is finding out. And obviously, China does things that we would never contemplate, we would consider inappropriate. But even with all of that, they're having trouble because these viruses are so contagious.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking vaccine stocks. It is mixed right now. Pfizer down 1.3%. Its German partner BioNTech, the ADR is up 3.5%. AstraZeneca's ADRs down 0.2%. Moderna's down 1.6%. Johnson & Johnson down by 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, for those of you who've been sticking around, we're going to finally do the great reveal. Almost. The story is among the most read on the Bloomberg today, and it involves probably the most followed individual on Wall Street.
We're talking about Jamie Dimon, the J.P. Morgan Chase CEO and board chair. Is out with his annual letter. He's calling for more sanctions on Russia, expresses pity for the Fed as well. Says, hey, they got a tough task ahead of them. Hannah Levitt is finance reporter for Bloomberg News. She joins us on the phone from New York City. Hannah, before we get to the details here, what is the change in tone of this year's letter versus last year's letter?
Hey, guys, thanks for having me. So last year's letter, if you remember, gave a pretty rosy outlook. It was, Jamie was saying this boom could run into 2023. He was saying, everything could add up to a Goldilocks moment. And so it's definitely a change in tone when, in the 44 pages of the letter this year, he's, really breaking down all these massive issues that we're facing globally at the moment.
Well, and so among those massive issues is, of course, the war. Talk to us a little bit more about what he said about the Russian war and invasion of Ukraine.
Yeah, so he called for increasing sanctions in whatever way security experts recommend. And he also said that he's not worried about JP Morgan's exposure to Russia, but that it could cost the firm $1 billion over time, and that the firm continues to look for secondary impacts around the globe. And that's something that we've heard a lot in recent weeks is that, even if a firm may not have a huge impact right now, it's kind of TBD on what could happen 6 months from now, or what kind of, how it will impact companies and countries, and what impact that'll end up having on these banks.
And $1 billion is a lot of money to a lot of people, but over an extended period of time to, the bank with the most assets in the United States, is that a lot?
No, not really.
Okay.
125 billion in revenue projected for this year, right? It's a lot. Yeah.
Yeah.
Well, so then when he says that, though, it's a reminder that, when you're thinking about either the financial markets or economic growth, like little bits and pieces of things, though, from different places, whether it's the war, whether it's inflation, whether it's supply chain constraints or labor supply chain constraints, all of this, though, it's important, right, Hannah, because I'm curious how you see it, that it can add up to significant eating into economic growth.
Yeah, for sure. I mean, one of his key points was about the energy crisis, which, has been obviously influenced by the war in Ukraine, but it's exacerbating inflation. So that's just one of the examples of where we're seeing, these big issues all being interconnected. And he called for the U.S. increasing energy production and also getting more LNG to Europe immediately, and wrote a bit about how he doesn't view it as mutually exclusive with longer-term clean energy goals, which I also thought was interesting.
Okay, let's get to monetary and fiscal policy. And I'm wondering about his comments with regard to the Fed and what the Fed has ahead of it in order to get inflation under control.
Yeah, for sure. Well, he said he does not envy the Fed for what it has to do. But, really his point was that in hindsight, all the fiscal and monetary stimulus in 2020 and 2021 was probably too much for too long. And so he's predicting that the Fed could raise rates more than the market currently expects or is pricing in. And, if they get it right, there could be years of growth still, but the process will cause a lot of volatility either way. And it's definitely challenging.
In the whole thing, listen, this is your world, Hannah, and Jamie Dimon, when he speaks, we kind of sit up a little straighter and take notice of it. And it certainly is always among the most read on the Bloomberg. I do think he thinks about his words because he knows that people do listen to what he says, pretty closely. What was the most stark thing for you?
I think for me, reading it, just kind of the tone change that we talked about at the beginning compared with last year. And it's not, he still did say that, like, the economy is in good shape. Consumers and companies are still in the U.S., flush with cash for the most part. So it wasn't like he was saying everything's terrible by any means. But his outlining of the challenges ahead felt really stark to me.
Do we get anything on whether he's going to stay there longer, or what's his deal?
5 years.
Quickly.
5 years, Carol.
5 more years, always.
It's like hashtag 5 more years.
Exactly.
Hannah, thank you so much. Really appreciate it. Hannah Levitt, she's finance reporter at Bloomberg News. As we said, this is among our most read on the Bloomberg, has been all day on this Monday.
There it is, the big reveal. Jamie Dimon. When he talks, people listen.
But I think it's interesting, that tone, right? And we keep hearing about a lot more negative tone out there in terms of the outlook.
Yeah, I think that's a real fair characterization. A lot has changed in just a year.
Yeah, exactly. All right, let's get back to world and national news. Speaking of tough tone out there, Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. President Biden is talking tough, calling for a war crimes investigation into Russia and President Putin following evidence of what Ukraine is calling torture in the Kyiv suburb of Bucha. Among the alleged atrocities is shooting unarmed civilians with their hands tied behind their backs.
You may remember I got criticized for calling Putin a war criminal. Well, the truth of the matter is so it happened in Bucha. This warrants him. He is a war criminal.
But President Biden stopped short, though, of calling the deaths genocide, even though that's what Ukraine's President Zelensky calls it. Biden did say he wants the U.S. to add more sanctions. Germany says it's expelling 40 Russian diplomats in response to the killings in Bucha. The Senate Judiciary Committee is voting today, on whether to move Supreme Court nominee Judge Ketanji Brown Jackson's nomination to the Senate floor. If Jackson is confirmed, it will likely be with almost no Republican support. This is Democratic Senator Dick Durbin.
This committee's action today is nothing less than making history. I'm honored to be part of it. I will strongly and proudly support Judge Jackson's nomination.
Durbin says Judge Jackson is fair and independent. The Judiciary Committee, which like the full Senate is evenly split between Democrats and Republicans, is almost certain to deadlock on her nomination. Inflation is hitting egg prices, but it's not due to the pandemic or the Russian invasion of of Ukraine. Officials say it's because of the bird flu. The Agriculture Department says tens of millions of infected chickens have been destroyed in an attempt to stop the spread. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic here live at Bloomberg headquarters in New York City in our Bloomberg Interactive Broker Studio. The story that keeps on giving.
Yeah, ex-Goldman banker Ng wanted the quote glory of making partner. This is according to prosecutors. Former Goldman Sachs banker Roger Ng joined a global scheme to steal billions of dollars from Malaysia's 1MDB fund for both, quote, glory and greed. That's what a prosecutor told the jury at his foreign bribery trial.
This story is among our most read on the Bloomberg on this money. So reading from Patricia Hurtado's reporting, she says even as Ng sought tens of millions of dollars in kickbacks, he also hoped to make partner at Goldman by helping the firm arrange a lucrative series of bond deals for the fund, the One Malaysia Development Fund there. And this is according to the prosecutor telling the jurors in the government's closing argument today. So we're starting to get to a close in this.
Ng is the only Goldman banker to go to trial with the 1MDB scandal, for which the bank paid more than $5 billion in penalties. He was charged with conspiring with his former boss, Tim Leissner, and financier Joe Low to plunder 1MDB as Goldman arranged a trio of bond deals for the fund in 2012 and 2013.
Just a reminder, tens of millions of dollars in bribes were paid to government officials in Malaysia and Abu Dhabi to get the 1MDB business for Goldman as Ng and Leissner scooped up kickbacks from the fraud. The U.S. alleging this. This is their charges that are out there. Leissner, who pleaded guilty and testified against Ng, told the jury he made more than $60 million and paid Ng over $35 million.
Ng is 49 years old, is charged with 2 counts of conspiring to violate U.S. anti-bribery laws and 1 count of conspiring to launder money. He faces the possibility of decades in prison if he is convicted. Carol, prosecutors said that Goldman made more than $600 million for its role in the 3 1MDB bond deals.
I mean, this is big money. This is big, again, allegations, charges. We'll see ultimately what the jury finds when all is said and done, but they are getting to, it looks like, closing arguments on this. So we'll see how it ultimately plays out. But it's something that has certainly caught our attention for many years now, and it'll be interesting to see how it ultimately plays out. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Best level of the day right now on the S&P 500 index, up 32 points, up 0.7%. The Dow now up by 91, up by 0.3. And NASDAQ is surging 250, a gain now of 0.8%. Tech shares driving the advance, powered by Twitter, the social media company, now surging 29.9% after Tesla CEO Elon Musk took a 9.2% stake in the company. 10-year yield, 2.40%. 2-year yield right now, 2.42%. Spot gold up 0.3, $19.32 the ounce, while West Texas Intermediate crude now rallying by 4%, $103.28 per barrel of WTI. Starbucks founder Howard Schultz has suspended a share buyback plan to mark the start of his latest spell as CEO, saying the cash could be better spent on stores and staff. Starbucks shares down now by 4.4%. Recapping, S&P up 32, a gain of 0.7. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Opening day for Major League Baseball. It's happening later on this week. And with that in mind, Bloomberg Business Week tapping into who are the real winners already of the season.
Well, I'll give you a hint. It's not the players at this point. Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Brokers studio. Ben Reiter is a freelance contributor. He's also the author of Astroball, The New Way to Win It All. He's a freelance contributor at Bloomberg Business Week. His story is featured in the current issue of Business Week magazine. It's available on newsstands, on the Bloomberg, and at Bloomberg.com/businessweek. So, Joel, they've got the most powerful union when it comes to pro sports. Why are their salaries falling, though franchise values continue to go higher?
They can't quite win the negotiation in like a real meaningful way. And obviously the lockout was something that got all of our attention. And there's this labor element to it that I was really captivated by. Ben being a longtime Sports Illustrated writer, also in addition to the book that you mentioned, he's hosted a podcast called The Edge. And I basically, got him on the phone with Max Chafkin, colleague, and said, what do you want to write about baseball? And I think, he did this step back story. This is opening day week, right? If you're going to go watch baseball, it's finally going to start. And what Ben really, I thought, succinctly summed up was that the players, are you going to root for millionaires or billionaires, first of all? And the owners are the billionaires and the players are the millionaires. So sympathies might lie a little bit more with the players at this point. But really, they did not come out with the upper hand here, did they, Ben?
No, they didn't. And let's be clear, this is a hard-fought labor negotiation, a 99-day lockout. The players' union were resolute. They had solidarity. And they did emerge with some gains. The minimum salary for players went up quite significantly. But overall, this is a case in which the owners maintain the upper hand in a business that, despite everything you've heard about baseball's decline, is booming. Revenues exceeded $10 billion in 2019, while player salaries went down. The median salary declined from $1.6 million in 2015 to $1.15 million in 2021.
That's a big drop.
This is the economic landscape that the players were contending with as they were negotiating this new labor agreement. They did gain some concessions, but on the overall landscape, the owners held strong.
The economics of this, Ben, let's just break it down a little bit, because there's that upper echelon of player who's doing great. No matter what, year in, year out, those marquee players are getting bigger and bigger contracts. But what about the rest of the league?
Right. Well, everybody sees the big contracts, right? Major League Baseball has 10 players with guaranteed contracts exceeding $300 million in value. Make no mistake, these are some of the largest contracts for any athlete in the world. But the vast majority of the player body is not doing so well. More than half the league operates on the minimum salary, which was $570,000 thereabouts last year. That was the lowest among major sports. And teams are getting smarter and smarter. They know that it is beneficial to them to pay superstars more and more every year, but keep the majority of their teams to those minimum salary players. that helps to suggest why that median has fallen and also why the average salary has fallen as well.
Okay, so let's talk about Rob Manfred, a central figure in this. The commissioner of baseball, a Harvard-trained labor lawyer, served as the league's chief negotiator for several collective bargaining agreements going all the way back to 2002. Where does he come into all this?
Right. Well, a lot of people think that a commissioner is, an impartial figure, right, operating for the best interest of the sport as a whole. That's not true in any professional sport. He works at the pleasure of the team owners. In baseball's case, the 30 team owners. That's really whose interests Rob Manfred was representing, and he's always represented them very well. And it's not a constituency with uniform interest, right? You have some owners like Stephen Cohen of the Mets, who is the wealthiest owner in the league, and he wants to spend whatever he wants to spend. His payroll is going to be $250 million this year. You have a lot of owners that don't want to spend at all, or as little as possible. One of the problems structurally in baseball is that spending on your team has been decoupled from profit. You can turn a very handsome profit, not spending a lot and not winning at all. So you have 4 teams this year who are going to be spending about $40 million or less on salaries. So do the math. That's a fraction of what some of the higher spending teams are. These are the interests that Manfred has to represent in these negotiating sessions, and clearly he satisfied all of them because the owners came away, in my opinion, very well.
Ben, how did it go over in the middle of negotiations when Manfred was practicing his golf swing? How did that go over with players?
Right. Well, this is a very tense negotiation. This is the second longest labor stoppage in the history of the league, second after only the horrible strike of 1994 to 1995. Rob Manfred was about to, do something that is very serious, to a lot of people, which is to actually cancel games. Like, no matter how nasty negotiations get, the cancellation of regular season games is kind of a bridge that nobody wants to cross. An Associated Press photographer captured him practicing his golf swing in the spring training stadium the day that he was going to cancel those games. Clearly, no matter how fraught these things got, Rob Manfred remained in control and confident, and he had every reason to, because the fact is, no matter how bad for the industry as a whole canceled games would have been for all parties, the players have much less capacity when push comes to shove to withstand that and the potential loss of salaries than the far wealthier owners.
All right, so what's the likelihood that anything changes in the near future? Because it's not like, sports contracts with media, especially baseball, they're doing just fine. So there's still a lot of money coming into this, sport, if you will. So what's the likelihood that anything changes for players more broadly?
Well, this collective bargaining agreement, Carol, lasts for 5 years.
It's a long time.
We have 5 years of labor peace, quote unquote, ahead. As Gene Orza, who is a longtime players union official, told me, collective bargaining produces incremental change. It doesn't produce a revolution. Did the players win some incremental change in this deal? Yes, especially for those minimum salary guys who really might never be millionaires, whose careers have no guarantees as far as their longevity. They'll be better compensated. But as far as the big structural things that tilt toward the owner's advantage, no, that's not going to change anytime soon.
So who wins opening day? Owners?
It seems like the owners always win in these sorts of negotiations. I think we have to chalk this one up to the owners. The players put up a very good fight. They did make some gains, but, it's another one for the owners.
Something we already know about the season.
Yeah, I was going to say, it might not just be baseball when it comes to that.
Hey, Ben Ryder, it's a great read. Thank you so much. Freelance contributor. Check out his book, Astro Ball, joining us on the phone in New York. And, of course, our thanks to Joel Weber. He's the editor of Bloomberg Businessweek magazine. This story in the current issue. Find it on the Bloomberg and also at Bloomberg.com.
A really great read. Go pick up the issue now. Check it out at Bloomberg.com and, of course, on the Bloomberg terminal. This is Bloomberg Radio, and this is Business Week.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Just 60 minutes left in the trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic. As we go cross-platform, as we always do, TV, radio, YouTube, to digest, well, a day where big tech is in charge, Carol.
Yeah, absolutely. No doubt about it. We're continuing to see some buying here as we're, just about an hour away from that closing bell. Once again, I'm looking at those Chinese companies that trade here, those ADRs in the U.S., because, folks, they're up about 12% in the past 2 trading days, another almost 7% bump higher in today's trade. Again, it's on expectations that Chinese officials will ease some of those rules that will really make those Chinese companies much more transparent, and actually, especially when it comes to kind of sensitive financial information, Tim.
Caroline, you mentioned tech being in control. That's certainly what we're seeing. A big thank you to Elon Musk for that. This is the Global X Social Media ETF. It's a tiny ETF, but it's up 5.2% today because it's got social platforms like Meta, Snap, Pinterest, and Twitter in it. Twitter among its biggest holdings. Social media stocks getting a lift thanks to Musk's purchase of 9% of Tesla. Of Twitter. He already owns. He already owns Tesla.
Yeah. Well, not all of Tesla. Obviously, these companies vaguely trade on a public market. But yeah, it's nice when you're that wealthy, isn't it? We're currently seeing S&P 500 up 0.7%. So actually managing to drive higher. We're actually still seeing volumes down by about 9% on the S&P, but we are seeing it 31 points to the good. We're seeing the Dow Jones Industrial Average laggard on the day, only up 0.3%. NASDAQ far and away the winner of choice, up 1.7%. Thank you very much, Elon Musk. 250 points on the upside. And even the Russell 2000, again, it's these cyclicals that seem to be just not playing up so well today, up just 0.25%. Point, even though actually, Taylor, we saw oil on the higher side.
Yeah, certainly you're continuing to see oil gain a little bit here, but I think what is so interesting, Caroline, you mentioned the cyclicals underneath the surface, because we mentioned we're near the highs of the session, but underneath the surface, a lot of maybe jitters going on. I think what's interesting is technology is pretty much the only thing leading this. You're up about 1.6%, traditionally seen as maybe the defensive sector, but then it's discretionary, which is the other sector in the green. You're up about 2%, maybe typically a little bit more risk on, but underneath at the bottom of the screen, Romain, really has been some of those cyclicals. You're thinking healthcare, staples, real estate, utilities. Yeah. That's pretty boring.
Yeah, pretty boring. But of course, all your favorites are higher: Apple, Microsoft, Amazon, Meta, Alphabet, and of course, Tesla. Tesla having a pretty good day right now. Shares almost up 6%. And of course, that was on the back of the news that they had delivered 310,000 vehicles in the quarter here. A huge milestone. And that was the
challenging quarter.
That was a challenging quarter. And a lot of people think this actually sets them on a path to 2 million on an annual basis for the year. It'll be interesting to see where they get to that. Of course, a lot of that being overshadowed by Elon Musk's other antics, which, of course, included amassing a pretty large stake in Twitter as of March 14th, 9% stake, more than 70 million shares bought. What he plans to do with those shares, or rather what he plans to do with the power that those shares wield him, it will be interesting to see. But of course, some of his Twitter postings, I guess, sort of after these shares had already been bought, now raising a lot of questions about what his intentions are. Nevertheless, Twitter shares up 28%, and are we even going to talk about the fact that he got denied entry? What is it, Berghain? Is that
Berghain?
Berghain. That's a big club in Germany.
Yeah,
right?
in Berlin.
I'm not embarrassed to say I had to Google it.
Well, apparently, if you have to Google it, you're not going to get in.
Yeah,
but apparently,
I realized that.
Musk tried to get in, and apparently they denied it. You can't deny the richest man in the world.
And even better, I'm not going to say the validity of this reporting, but ex-Berliner is reporting that now he's managed to take the head of security from the Berghain, and he's going to be joining the new Gigafactory. So really? I love this sort of tip for tat.
Was that in the 13G as well?
Yeah.
Oh, okay. Interesting. Well, Elon Musk, we're going to be talking a lot about him today, I'm sure.
Yeah, he's very much in the zeitgeist. So too is Kanye, apparently not going to a key music event in the next couple of weeks. But I'm getting distracted.
He canceled on Coachella.
Yeah, he's not going to be at Coachella. Meanwhile,
get in the zeitgeist, Romain.
Okay.
He's still focusing on Berghain. Meanwhile, I digress. We look at what's happening with the NASDAQ 100. Look, there is momentum. It's helped by Elon Musk on the day, but generally, we are up. Very rarely do we see the NASDAQ 100 climb 10% in 4 days or less, and it's currently just occurred in March. Points perhaps to further buying. Carol, you were talking about the Chinese stocks on this massive wind higher in the last few days. Well, certainly the NASDAQ 100 also catching that bid.
Yeah, it's, we're definitely seeing some support, right? And seeing a bounce back. What's interesting too, I just want to go back to Tesla. It is up 50% from late February. So it has been a tremendous bounce for that one. All right, so we're going to get Fed minutes this week. A lot of things that maybe will help kind of shape the trade going forward. Jamie Dimon, this story is among the most read on the Bloomberg terminal. Of course, when Jamie speaks, we all listen. We stand up a little straider in terms of what he has to say. He
we
put
would
out
never deny him entry to the club, would we?
Are you
He
kidding?
would
He's a
definitely be
founding
denied
member.
entry in Berghain. It is the most. It is the most super club in Berlin. Only wants you.
I think
if
of
you
all the.
are
I
Caroline,
think
have
of
you
all
been there?
Out of all the bank CEOs, he's definitely got to be the coolest.
As long as he's
right?
wearing a lot of black eyeliner, he might be allowed in.
That I would pay money to see. All right, let's get to what he had to say in his annual letter to shareholder, because our Hannah Levitt saying his letter last year was pretty rosy, even talking to maybe like kind of a Goldilocks outcome or moment. This year, the tone was much more negative, if you will. So here's what he had to say. I do not envy the Fed for what it must do next. The stronger the recovery, the higher the rates that follow. If the Fed gets it just right, we can have years of growth and inflation will eventually start to recede. In any event, this process will cause lots of consternation and very volatile markets. Like, that is the world we are living in. So it's kind of interesting to see that it's a very different tone this year. But guys, I do wonder, are people, Tim, starting to get even so negative at this point that maybe they're overestimating the downside?
Well, it depends on who you talk to. If you talk to Morgan Stanley Chief U.S. Equity Strategist Michael Wilson, he says now is the time, well, and he's a bear, right? Now is the time to be pessimistic about what's happening, especially given the rallies that we've been talking about. He said it doesn't have legs.
I think what was so interesting, though, and Caroline will back me up on this, we just spoke with the COO and the CFO, I believe, over at Lloyd's, and said that actually recession isn't one of the bigger concerns. It really does remain inflation. So we've talked a lot about, is there the stagflation recessionary environment? And at least for some of the CEOs, that's not top of mind. It still very much has been that big inflationary word.
And more importantly, I guess, too, how the Fed and the other central banks out there respond to it. I mean, we talk about what the Lloyd's CFO was saying. I mean, the idea here that rates are still well below maybe where they need to be to actually combat that. And I guess what's the question, what's the response here when it comes to that differential and closing that gap?
And of course, we need to remember that all of this, adding the fuel to what has been the inflationary fire, the concerns, of course, about geopolitical instability is, of course, Russia-Ukraine. That remains a narrative in the market today. It remains yet one of concern where we feel, well, there's certainly no progress seemingly being made.
Right. The longer it goes on, right, everybody is thinking, of course, about the humanitarian cost, but also how it really changes things maybe longer term for businesses and markets. All right, guys, we're going to be back in less than an hour's time. We're going to count you down to the closing bell, beyond the bell, we call it, on radio, TV, and YouTube. We'll be back to count you down to the close on this Monday.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so we are definitely seeing some continued buying here with less than about 40, 50 minutes left in today's trading session.
Hey, I'm just looking forward to our conversation that we're going to be having with Kathy Wood in about an hour's time, because a lot of what we just spoke about with our friends at Bloomberg TV are topics we're going to be talking about with her.
Yeah, well, and what's interesting, too, is she was tweeting over the weekend and in a nutshell saying that the Fed hiking rates would be a mistake. And so we will talk to her about that, get her macro perspective. Really curious to see what she has to say about Tesla and Twitter, that deal. But I'm also curious, whether or not she thinks we've bottomed out in terms of some of the pullback that we've seen, or whether or not there's more downside to come. And I want to know what she's been buying or selling, for that matter. Including Chinese stocks.
That's what I want to hear, if she's changed her tune at all when it comes to Chinese stocks. It's something that you've talked to her a lot about over the last couple of years, Carol, mostly over the last, 6 or 8 months. And then also interest rates and Fed policy. You mentioned she was tweeting about it, but how do we get inflation under control? Because she's talked a lot about inflation, a lot of deflationary forces, and so far we haven't seen those in effect.
Right, and these are things that certainly she's very familiar if you go through kind of her longer career. As we mentioned, we've got a rally underway. We're going to talk a little bit more about Tesla and Twitter. Our Dana Hull's going to be with us to really get into kind of that move, because I think it's interesting from a Twitter perspective as well as an Elon Musk perspective.
And from an entire social media perspective. You see shares of Pinterest higher, you see Meta higher. Carol, Facebook, the now Meta, formerly Facebook, it's up 25% from its lows just a couple weeks ago.
Well, look at Tesla, up 50% from kind of late February. I mean, we have seen a tremendous bounce, and that's real kind of money creation, if you will, in the market, right? So we'll get to that in just a moment.
Let's get to Washington, D.C. for world and national news. Nancy Lyons is standing by in our 99.1 studio. Hey, Nance.
Hey, Tim. President Biden says he's been criticized for calling Russian President Vladimir Putin a war criminal. Now, he says images of mass civilian graves in recently liberated Ukrainian cities now back him up.
This guy is brutal, and what's happening in Bucha is outrageous, and everyone's seen it.
President Biden says the U.S. will continue gathering evidence for potential war crimes trial, and he says he'll keep pushing for more sanctions. Ukraine's president, Volodymyr Zelensky, calls what happened in Bucha genocide, and he'll push for the tougher sanctions when the G7 meets this week. A new flagship UN report on climate change indicates harmful carbon emissions from 2010 to 2019 have never been higher in human history. And UN Secretary General Antonio Guterres says it's proof the world is on a fast track to disaster, and he says we need to drastically reduce our reliance on fossil fuels.
It's time to stop burning our planet and start investing in the abundant renewable energy all around us.
Guterres says we also need to cut global emissions 40 to 70% by 2050. The report warns the world will likely exceed the agreed-upon global warming limit of 2.7 degrees Fahrenheit in this century, even if all countries meet their Paris Agreement pledges. Jury selection is underway in the penalty phase for convicted Florida high school killer Nicholas Cruz. 12 jurors will be asked to decide if Cruz should live or die. Under Florida law, the decision needs to be unanimous. Cruz pleaded guilty to 17 counts of murder, 17 counts of attempted murder for the massacre at Marjorie Stoneman Douglas High School in 2018. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Carol Master, Tim Stenovic here on Bloomberg Business Week on Bloomberg Radio. Hey, this story, I feel like there's so many connected stories between Tesla, Twitter, and then Hertz, which is basically, there's my gainers in a nutshell.
Those are good gainers.
Right? It's just kind of, but it's like not even, separate. I feel like they're all so well connected.
Yeah, a lot of people woke up to this news this morning that Hertz is planning to expand its fleet of electric vehicles, not with Tesla vehicles, which it announced it would buy 100,000 of them just a few months ago, but with 65,000 electric vehicles from Polestar, this over the next 5 years. It's a big bet that its renters are both EV curious and eager to drive brands other than Tesla.
So if you're not familiar, Polestar, it's an all-electric automaker. It's controlled by Volvo Car and its owner, Zhejiang Geely Holding Group, which is a huge auto maker over in China. They're going to join, as Tim mentioned, the purchase of Hertz of those Tesla vehicles as well. The new deal delivering a boost to shares of Hertz definitely in today. And Gores Guggenheim, the special purpose acquisition company, the SPAC, planning to merge with Polestar. So, again, you get kind of that white org chart, but it all kind of fits in today.
As I was reading the story this morning, I was thinking to myself, okay, do I want to rent an electric car right now? And my question would have a lot to do with, or the answer would have a lot to do with, is there the charging infrastructure where I'm going in order to support an electric vehicle, whether that's a Tesla or a Polestar?
Right.
And the other part of this has to do with, your destination. And if you think you can actually get from the airport to wherever you're going without needing another charge. A lot of people argue that, you can plug these in at home and without needing any sort of special equipment. And it takes a longer time to charge, but most of the driving that you're doing isn't necessarily long distances where you would require it to be charged mid-journey.
It's a pretty aggressive, though, move, it feels like, by Hertz, right? Thinking that this is what people who come to rent cars with them, this is what they're going to want. So they are definitely upping their exposure to it. Gores Guggenheim, which is the SPAC that expects to merge with Hertz, it's up about 14%. And shares of Hertz Global today, they're up more than 10% in today's session. So definitely getting a big boost on this move. You are listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. Stocks trading at or near session highs. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading higher, led by gains in technology. Dow's currently up 79 points. S&P's gained 31, while NASDAQ climbs by 248. The U.S. 10-year yield at 2.4%. Gold is up 5. Oil is climbing, but Bitcoin is down by 1.8%. Among the main 11 S&P sectors, only telecom, tech, and consumer discretionary were in the green. Utilities and real estate were under pressure. And leaders to the upside in the Dow, Salesforce, Apple, and Intel, while Travelers and McDonald's led to the downside. In deal news, AMD to buy networking technology maker Pensando for $1.9 billion. And in other news, Twitter soared as much as 31% on the Elon Musk stake. Wrapping things up, Biden says he was seeking more sanctions for Putin. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over you, Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've been talking a lot about Tesla, and you know why. I mean, the stock, first of all, it's definitely rallying in today's session. Let me just pull it up on the Bloomberg. It is up about 5.5% here. Let's get to it because there's a few stories at play. We talked about Elon Musk taking a 9.2% stake of Twitter, but we also had some really impressive first quarter delivery numbers from Tesla.
Well, let's talk about some of those delivery numbers with Dana Hull, technology reporter for Bloomberg News. Dana joins us on the phone from our San Francisco bureau. Dana, we love talking Tesla with you and, you know, maybe even a little bit of Twitter and Elon Musk in just a few minutes. First, I do want to start with these record numbers. 310,048 cars worldwide in its most recent quarter, the first quarter of the year, despite the fact that Elon Musk said it was, quote, an exceptionally difficult first quarter. That beat estimates of 309,000. What did you make of it when these numbers came in Saturday morning?
Yeah, I mean, it was definitely like a win for the company. I mean, they kind of eked it out. We knew that it was going to be rough. I mean, every automaker on the planet is struggling with supply chain issues. First, it was chips. Now it's wire harnesses. Like the cost of precious metals that are used in EV batteries are going up. So the fact that they, you know, and the expectations game, I mean, let's face it, it is a game. Like, you know, we have our consensus, FactSet says it has theirs. But, you know, people were really thinking, oh, man, they're not going to make it because they had to shut down the Shanghai factory towards the end of the quarter, but they did. You know, I mean, 310. It's a squeak, but it is a beat, and it just shows that like consumers really do want EVs. Like we are at an inflection point that is just accelerating. So you know that news dropped on Saturday morning, and I think the market had some time to absorb it, and you're seeing the stock price reflected in that today.
Yeah, it is impressive though. Before we get to the Twitter news, which is like the elephant in the living room, but it is impressive, right, Dana, that Elon Musk consistently seems to be able to figure out how to eke it out. I love how you said squeak but a beat. But it's interesting, right? Whether it's his supply chains or getting things done, he keeps kind of delivering. It feels like, no pun intended.
Yeah, I mean, you know, I wish that there was a little bit more transparency from Tesla in terms of where these cars went. I mean, they report global deliveries. They don't break it down by region. You know, they used to, in their quarterly filings, give an accounting of the biggest markets. So it would be like U.S., China, Norway, the Netherlands, other. Now it's just, I think, U.S., China, other. You know, so I mean, you know, and you know, all kinds of fans and analysts kind of try to figure out the numbers based on how every country reports. But I just wish that Tesla itself would just be more transparent about, you know, where did they deliver these cars to? Yeah, no, I mean, I think it is impressive. I mean, I think that, you know, they pay very close attention to macroeconomics, supply chain issues, and, you know, and then they have their own consensus that they send around to analysts too. So they do sort of, you know, they know what the street wants to see.
Okay, Dana, wait, one more tiny question on Tesla, then we're going to get to Twitter. Is this proof that Tesla and Elon Musk are able to figure out the supply chain, that they did squeak by this figure?
I mean, we'll see. Like, I mean, I think that the fact that they are vertically integrated certainly helps them. I don't think they're out of the woods yet. I mean, the war. I mean, the Russian invasion of Ukraine is going to have long-term impacts on price. So, they may be okay from like a production standpoint, but they're definitely going to have to play around with the pricing as the cost of materials goes up. And I think that we haven't seen quite yet like how price impacts consumer demand. Right now, you have this thing where, gas is so expensive, particularly in the United States and Europe, that a lot of people are really flocking to EVs for the first time. But if the cost of batteries goes up considerably, are people going to think twice about kind of paying that kind of money for a car?
All right, we want honesty from you, Dana Hall. When you saw the Elon Musk investment in Twitter, what were the first words out of your mouth or the first bubble above your head?
I think I was like lying in my bed, doom scrolling, and said to my husband, like, "Oh my God, Elon just bought a stake in Twitter." And then I looked to see, does this mean that he is the largest shareholder in Twitter? Yes, it is. So it's like, it's not just that he bought a stake in Twitter. He is the largest he is the largest shareholder of Twitter, and he is.
Doesn't feel very passive, but go ahead.
Yeah, I mean, besides Barack Obama and maybe Justin Bieber, like who else is as popular on the platform? So it's just like another wild turn of events. But it doesn't surprise me. I mean, I've often said that Elon Musk is like an octopus. He's got his tentacles in all of these different industries, and he's the richest person on the planet. And he's very, he's always been very deft at social media, and I'm sure he has some thoughts on how the platform could be improved.
Well, that's my question, because we know he has thoughts on traffic, and we see Boring Company as a result of that. He has thoughts on space. We see SpaceX as a result of that. We know he has thoughts on cars. Tesla's there. So what does he do with Twitter?
I mean, if you just look at his tweets, I mean, he's complained about, the fact that there's all these crypto scammers, on the platform. And I think he's tweeted things like, "Jack, can we please clean this up?" when Jack was still the CEO. I mean, he's talked about being a free speech absolutist. I just think it's funny, there's nothing passive about this man,
Right.
So even though, he might not be seeking a board seat, but, I just sort of can't imagine that he's just going to sort of not be engaged with the company.
Well, I'm going to just say not a bad day for Elon Musk, considering the bump up in Tesla today and the bump up in Twitter, his new big holding, right? His valuation just gets even higher. Dana, thank you so much. Our Bloomberg News Bloomberg News technology reporter Dana Hall joining us on the phone from our San Francisco bureau. I mean, both of them, like I said, Tesla up about 5.5%, and Twitter is, I think, our best performing stock in the NASDAQ 100.
Our Elon Musk, wealthiest person in the world, according to the Bloomberg Billionaires Index, $273.1 billion in net worth.
And richer today.
By $1.6 billion.
It's unbelievable. All right, you're listening to Bloomberg Business Week. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, yes, indeed. This is Bloomberg Business Week on this Monday. Watching the markets here, we've got gains pretty much across the board, although not necessarily as broad-based as some would like it. But coming up, we're going to get to the chart of the day.
Looking forward to Kriti Gupta joining us on this one. She's fresh back from vacation, and this is all about Elon Musk.
Yeah, I mean, it is really our story today on a couple different fronts. We'll get to that in just a moment. First up, though, let's get back to the trade and Charlie Pellet.
Hey, thank you very much indeed. 28 minutes to go ahead of the closing bell. Let's begin with the Elon Musk Twitter story. What a move for Twitter shares, up 27.9% right now. The social media company is surging after Tesla CEO Elon Musk took a 9.2% stake in the company. Not just Twitter, but Tesla rallying as well, up 5.2%. Worth repeating on Twitter, up now by 27.9%. The Dow, the S&P, NASDAQ, all advancing. Investors are assessing the latest central bank commentary, along with developments in Ukraine. S&P up now by 31 points, just about the best level of the day, holding near those highs, up 0.7%. The Dow up 69, up 0.2. NASDAQ up 254, up by 1.8%. 10 years down 12/30 seconds. 10-year yield right now 2.42%. 2-year yield, we've got the 2-year 2.43%. Spot gold up $5 the ounce to $19.30, a gain of 0.3. West Texas Intermediate crude up 4.6%, 103.75 a barrel. A lockdown of Shanghai intensified over the weekend amid a surge in new cases and reports of new substrains of the Omicron variant emerging. China is experiencing its biggest jump in daily infections since 2020. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Surveillance this morning, he talked about China's COVID strategy.
Well, I think they should be thinking about vaccinating with high-quality vaccines. And, you know, whatever that point is where they can get that done, then that gives them a chance to be more flexible. I do worry that if they just opened up, they'd have a tremendous amount of illness. And so I'm sure that they're really stuck between a rock and a hard place right now. But the key to get through this is high-quality vaccines, high percentage of people vaccinated, and then opening up.
And Dr. Sharfstein is with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking those vaccine stocks, Pfizer down 1.5%. Its German partner BioNTech, its ADRs up 3.3%. ADRs of AstraZeneca down 0.1%. Moderna's down 2.6%. Johnson & Johnson down by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we do each and every day at this time, except when Kriti Gupta is on vacation, we check in with her for her chart of the day and what she's caught her eye for the day. Sign up for Kriti's chart of the day if you haven't already. You can do that at kgupta129 at bloomberg.net. Also, you can check her out on Twitter and Instagram at Kriti Gupta News. Today, we have been talking a lot about Elon Musk, not just because of those deliveries, record quarter for Tesla, but also that 9% stake that was revealed. I mean, I woke up to it this morning, Kriti.
So did I.
Yeah, and sending shares of Twitter significantly higher. Take us through your choice for the chart of the day today.
So I'm going to try to do something really hard and talk about it from a macro perspective, because I want to hit something, an angle perhaps that maybe hasn't been hit from the micro perspective. We've been talking about what this means for Elon Musk and how he kind of wants to maybe shake up things in Twitter or in the social media industry broadly. He's been very vocal about that. And like Tim mentioned, the kind of Tesla piece of the equation together, Twitter and Tesla, the moves right now are responsible for about a quarter of the moves you're seeing in the S&P 500. So that is important. It's also, the Tesla move, I should say, is also driving the NASDAQ, which is outperforming. That being said, my chart of the day is looking at Twitter, but looking at Twitter relative to its social media peers going back about a year. So we're comparing Twitter to the likes of Snapchat, Pinterest, and Meta platforms, other social media companies around the world, and not just the United States. And what this really tells you here, and for our radio audience, what you need to know is that you've kind of seen this deceleration in Twitter shares in this line. So the line kind of goes down. It tells you it's been underperforming its peers. A lot of that has to do with questions about how do you monetize a platform like this, and why should you
I feel
have
like it's
investors?
a conversation we've been having for years about Twitter.
Absolutely. And especially at a time when a lot of people have been talking about decelerating growth and saying, well, if the economy is going to slow down, that means ad spend is going to slow down. That means companies like Twitter, Snapchat, Pinterest aren't going to be doing that well. That has all turned around since about the start of the year, and you can actually see it in the shares. Since really you started to have these geopolitical tensions in Ukraine, the war break out there, Twitter shares have actually risen. And this is something you see a lot when it comes to comparing Twitter relative to its other social media peers. When there's a big, significant kind of global event, I'm thinking the 2020 presidential election is a great example of this, where you did see a lot of those on-the-ground developments, especially from President Trump at the time, now on the ground developments from the war. A lot of that hits Twitter first before it hits, say, the AP Newswires or other kind of metrics. This is really important when it comes to Twitter shares, because that's really where you see them outperform, and not to make light of the tragedy, of course, but this is going to be something you want to keep an eye on when it comes to investing in Twitter and what that actually means. We had Bloomberg Intelligence, Mandeep Singh, talk about, in addition to this, you also have them trying to monetize. You're looking at Twitter followers, super follows, Twitter Blue, subscriber services for Twitter Spaces. That all means that Twitter could potentially be exceeding their targets for 2023 far more quickly than possible. Now add in the Elon Musk effect on that, and this is something you really want to keep an eye on.
I should be paying Twitter to spend less time on Twitter and to prevent me from spending my entire life.
I thought you got rid of the app or something at one point.
I'm addicted. I put it back on.
You put it back on the phone. No, but this is, it's interesting. We know Elon Musk plays around with Jack Dorsey of Twitter. They both have been kind of all in together on Bitcoin, talking about it on the platform. And Elon, many would argue, right, is pretty effective in using the platform, certainly to get out his message and control his narrative around the company or his responses to things. But that story about, like, how does Twitter ultimately monetize a company that we all talk about, and certainly journalists, right? We all use it.
Yeah.
But it's like, what's ultimately the monetization for this company?
Yeah, and I'm going to add, because you mentioned Jack Dorsey. When I think Jack Dorsey, I'm starting to think of Square now, right? SQ. This is kind of a funny thing that people are talking about for Twitter. When you see Twitter shares rise or fall, Square kind of just follows it, even if there's no fundamental reason for it. So Square shares, SQ is the ticker, up 9% today. That is huge.
Even though it's called Block now, right?
Even though
the ticker is
still called
SQ.
Block. Excuse me. Yes, thank you for the correction.
But you do. It's like, what has changed?
Yeah, nothing. It's just following Twitter. So that's going to be another name you want to keep your eye on for the story.
Well, speaking of keeping your eye on, we have about 30 seconds left, Kriti. Your eye on has to do with Putin and a war crimes trial. We heard that from President Biden earlier today.
Yeah, making a very strong statement. Basically, a story by Jordan Fabian, Jennifer Jacobs, John Folane. They are talking about how do you actually hold someone accountable right now at a time when you can't really treat someone, or you can't really put someone on trial in absentia, which means that they're not there. And on top of that, they're a member of the Security Council. So it gets really tough, and that's what we're going to be wanting to hear from President Biden. How do you hold him accountable?
Right, but the significance of the words and just putting it out there. The narrative continues to evolve on this one as well. All right, you're listening to Bloomberg Business Week. Kriti, thank you so much.
Let's get to Washington, D.C. for a check of world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. President Biden says we've seen the photos following the Russian retreat from Bucha, where civilians are seen dead in the street with their hands behind their backs. So he's once again calling Vladimir Putin a war criminal.
We have to gather the information. We have to continue to provide Ukraine with the weapons they need to continue the fight. And we have to gather all the detail so this can be have a war crime trial.
His comments to reporters came after Ukraine President Volodymyr Zelensky visited Bucha and called the Russian actions genocide. Russia says the videos being shown are fake. The international goal to limit global warming to 1.5 degrees Celsius is officially on life support.
The latest report from UN-backed climate scientists says the world may be on track to warm by more than 3 degrees. That would be twice the target from the Paris Agreement. They say greenhouse gas pollution has to peak before 2025 at the latest to keep the Paris target alive. Based on pledges made before last November's climate summit in Glasgow, scientists say emissions in 2030 would make it likely that warming exceeds 1.5 degrees before the end of this century. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Senate Judiciary Committee's vote on Judge Ketanji Brown Jackson's Supreme Court nomination has been delayed. California Democrat Alex Padilla experienced travel problems returning to Washington. He is expected, though, back later today. Democrats are expected to pull procedural levers to move Jackson's nomination out of a deadlocked committee. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So among the stories popping up on our radar, this has to do with Germany. It will temporarily take control of a unit of Gazprom in the country as it seeks to safeguard security of gas supply. This is one of the big macro stories that, you know, I would think safe to say we're going to look back at history and time and saying, okay, this is when we really changed in terms of the energy markets. I'm looking forward to actually talking about this with Kathy Wood.
I was just going to say that.
Who has been, you know, very strong in terms of her convictions about long-term investment strategies. And this, a big one for her, has been the pivot and big move to EVs and really alternative energy overall.
Well, to what extent does the last 8 weeks in geopolitics actually increase the speed of our transition away from fossil fuels,
right,
and instead toward renewables? We know that that is a bumpy road, Carol, and we're seeing that play out in Europe and the United States right now.
Yeah, and what's interesting is, too, you know, we've talked about certainly in the fight against climate change, how you really need global cooperation for this to really get some traction. And it really hasn't been that case. There's been a lot of big events and, you know, talking about what different nations are going to do. But you do feel like all of a sudden there is this global coordination, certainly among European nations and the U.S., and trying to think about, okay, how do we need to think about weaning the world off of any kind of Russian energy?
Well, we know what Germany is doing right now. Gazprom is the owner of the energy supplier WinGas and a gas storage firm. It's going to come under the trusteeship of the German energy regulator until September 30th. That's according to the economy minister. So that means the Federal Network Agency will assume the role of a shareholder and can take all necessary measures to ensure security of the supply. He said the government won't ultimately take ownership of the company, though.
Gazprom subsidiaries in Europe really coming under pressure as clients and business partners refuse to do business with them, raising the prospect that some will not survive. And so, you know, energy, it is a national security issue for these different countries that are involved, right? We talk about it all the time. And so you are seeing, you know, increasingly these big moves, right, being taken and kind of setting a different future going forward.
Yeah, but how can they get away from Russian gas? Not anytime soon.
Yeah. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ holding near session highs. 13 minutes to go ahead of the closing bell. Financial markets beginning the week with moves higher as investors assess the latest central bank commentary along with developments in Ukraine. Tech shares driving gains, powered by Twitter. The social media company is surging now by 27.6%. after Tesla CEO Elon Musk took a 9.2% stake in the company. NASDAQ's up 255 points, up 1.8%. The NASDAQ 100 index is advancing by 1.9%. Russell 2000 higher, up by about 0.1%. S&P's up 33, up by 0.7. The Dow's up 88, higher by 0.3%. 10-year yield 2.41%. The 2-year yield also now at 2.41%. We've got gold at $19.30 the ounce, up 0.3. West Texas Intermediate crude up 4.4%, 103.60 for a barrel of WTI. Again, recapping equities advanced, S&P up 33, up 0.7. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Among the few encouraging trends in American education during the pandemic has been the growth of public charter schools, where enrollment has risen by 7%. Fed up with underperforming public schools, parents are voting with their feet. Unfortunately, the Biden administration appears intent on ignoring this warning sign. The Education Department has proposed new rules that would effectively bar charter school operators from receiving federal support if they open in areas where public school enrollment is declining. Those are the very communities where dissatisfaction with public schools is boiling over. Charter schools can't fix all of the problems facing the U.S. public education system, but they're a lifeline for millions of students trapped in failing schools or at risk of dropping out. Biden should show he's on their side and scrap these wrong-headed rules. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN-GO on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?